fuck out of bed, bitch. Go. Get up, and then they got go. Time to wake up, bitch. Get up. Get up. Get up.
All right, going to end that before it flips on to the next video. I actually played that for me just because I'm trying to wake up this morning. Hopefully everybody had a great weekend. Lots to talk about today. We will go over it here. So this is just some of it. But Trump, no plans to meet with China this week. I saw the markets drop yesterday after that was announced. Microstrategy bought more Bitcoin. We're going to get numbers on that today. Josh Mandel, people have asked me to respond about my thoughts, so we'll go over that in regard to MicroStrategy and some of the things that he thinks. Warren Buffett changed his tune on the trade deficit. We'll actually jump into that just in a second here. I've got our fertility issues tied with a broken money. Spoiler, yes, they are. Romania's Conservative Party wins for a third time. Will the EU let them? The UAE picks the United States for AI, and is an India deal coming this week or soon, and then Iran keeps blowing up and getting on fire. So that and a whole lot more in regard to topics. We will start off first, though. I finally, after a month, like literally almost perfectly a month, I updated my portfolio. So here we go. We're going to walk through it real quick. Good morning, everybody. Good morning to Smoker Up, Yeehaw, and Q9TQRTRS, and Hippie Hank, and Man Mahindra, who's always here. Thank you, sir. Nick and everybody else. BGZ. Good morning, all. So it's looking better. It's looking better, right? So, and I didn't update my low. It was a little bit lower than the 2.58. It was like 2.3 something. I got to probably fix that. So the low for 2025 did drop even further. I just realized that that's not updated. I did add a few things in here. And let me zoom in just to here. So I moved the current over. I kept the high for what I've hit for this year. I've got a little disclaimer about this one because it was only like for a week that I even got that high. It was just a really good week. And then the target is 12 million. Wish I would have taken more in profits in that week and been a little slower and less aggressive. But, you live and you learn. But then I got my target in here too. So you can kind of see the progression of what I've been accomplishing and what I am looking to accomplish. And I can try to keep it low at 12 million for this year. And my goal is actually loftier than that. It's probably really 15 to 30. But I want to, again, I want to kind of hit it. I want to put out a number and then surpass it. So up about almost $1 million since in the last month. I said, I just said that 6.95 million, like ignore that because it was less than 1% of my investment career that I sat at that level over the course of about a week. Really, 5 million is probably my high. If you exclude that, it's probably closer to that. So it was just a couple of really wicked days that made me a ton of money. So I'm actually not too far off my high if you take that into consideration. And then portfolio allocation has changed quite a bit. Let me see. I might have to shrink this down just a bit. So you'll see, I actually didn't even realize this. There's a bunch of things I didn't realize. I didn't realize I had 5% still in Tesla. I thought all my money was in TSLL, but it's not, even though that is my fourth largest position. But Mara is actually my largest. It just grew so much. I don't even know what it's at right now. It's not $1 million, and it's probably down a little bit today because just all the broader market's down today. But it's just a really, really crazy level. So 21% in Mara, 19% in MSTX. That's how confident I am on MSTR right now. 15% in CleanSpark. Again, these have just grown. That's why they've gotten so big. I just timed the bottom really well. TSLL at 12%. But again, when you add in Tesla at 5%, I've got about 17% of my portfolio in Tesla right now. And I might switch some of this to TSLL. We'll see how that plays out. ARKG's at 11, Iron's at 5, again, Tesla at 5, MicroStrategy at 3. So if you add up MicroStrategy, my 3% allocation with my 19, it's 22%, actually surpassing Mara. I'm only 2% in shitcoins. Again, for anybody who wasn't aware, I actually did cash out a decent amount of my shitcoin portfolio because I had $159,000 plus that I still had to pay in taxes, and I wasn't able to float some balance transfer offers. Funny story about that though. I'm getting a bunch of 0%, 21 month, 15, 18 month balance transfer offers now for all my credit cards after they denied me when I applied for them. Now all of a sudden they're sending them to me, and I don't know if this is just because I'm not applying for them and they're like, oh, hey, you meet some requirements that went through our system, or if this is showing a loosening in a ever tightening credit market over the last, year plus. So very interesting, weird, but yeah. So only 2% for shitcoins. Sol Strategies is sitting at 2%, and the shitcoins are basically sold too. So it's really like 4%, and then SMCI at 2% allocation, 2% in cash, 1% in MSTU. So a lot of Bitcoin exposure. You'll kind of notice that, and I think that's the big thing. Last time I had TLT in here, let's just see what I had. I had a lot of cash last time, right? And so I deployed that. I had 10% in TLT. I wiped that out because I realized that trade was just too dangerous at the time, and I didn't want to deal with it. So I wiped that out, and then I just reinvested that. So between the 10 and the 16, I put about 26% into these other things, my favorite things, and reallocated them, and that's been doing really well. Again, getting close to $4 million. I've got no complaints. If we just look over here from where I was when I retired. When I retired was in 2020. I had about 300. I want to say it's 375,000. Can't really remember. The numbers get fuzzy because it's been like 5 years, almost to the day. Actually, I think I retired in May, so 5 years that I've been retired. But you can see how I went from negative, recovering from the 2017 when I got back into the markets again and got into Bitcoin in a big way. And they all took a shit because I didn't know what the cycle was. And then, again, retiring over here, and then just everything since has been a lot of fun. And then I tell people this, but it's only recently that I've started to have any kind of income. It's in this year, or actually 2024, that I started to make any kind of money from social media stuff. Outside of that, it never happened. And so I was supporting myself, my wife, my parents, my in-laws, and others, while retiring with $375,000, and then the wife and in-laws and all that stuff that didn't come till like the end of 2021, 2022, but whatever. I started supporting all of them, no income, eliminating their income, and then having to subsidize it. And I've still managed to get to where I am right now, this 3.632 million. So I think that's pretty good. I don't know. There's probably people that are better, but I think over the course of the time, especially some tough years, 2022 was not an easy year. I don't know how many people remember that. That was not an easy year, and I still grew my stacks. So I'm pretty impressed with what I've done. I don't know. Not everybody is. Whatever. Anyway, before we get too far down the rabbit hole, everybody probably knows that Warren Buffett is stepping down. We're gonna actually listen to a couple of parts of the interview from that. And then also, if you guys look in the corner here, so we did not manage to stay above the green line of support like I was hoping we were going to. We busted down that first line of support, and now we're kind of meandering over here. This could be like a head and shoulders type thing. Measured move maybe gets us into the 90K range. It's possible. I actually think it could be a fake out. So we'll see. Is it a buying opportunity? I've got about 55,000 in cash. I'm probably looking to apply some of it, but I'm going to wait though. I'm probably not going to do it here. Yeah, I'm probably not going to. I'm just going to be patient. I don't have that much cash. So if we drop down and we wick down to like the 91 range, 92 range, where this volume on the shorter time frame starts to pick up over here on the right, you can see it. Then that to me is like enough of a washout where it becomes interesting, because then it potentially becomes like something like this, where you have potential to break higher, and I like that kind of stuff. So I'm just going to actually mark it like this to try and see if I'm lining up where I want to. Yeah, that's pretty close. That's pretty close. Let me just do it like this, maybe. So if we get a breakdown, that's probably where I'm looking to deploy capital, just so you guys know. And if it doesn't happen, it doesn't happen. 1,900 Bitcoins purchased. Let's hop over to this real quickly and just get that out there to the masses, because our boy Sailor did not disappoint. There you go. So again, so that was for last week. I want to say it was over 5,000, 5,300 or something like that. So between the two of these, we're sitting at over the last 2 weeks, like almost all the new supply of Bitcoin being purchased just by Michael Saylor and MicroStrategy. Seems interesting. All right, while we're breaking down and the world's falling apart, and we'll just look here at the heat map real quick. So you can see, again, pretty red day to start in pre-market. We're seeing a bunch of people jump back into gold. I'll just kind of pop this up over here. 1 second. We're seeing a bunch of people jump back into gold. I actually don't think gold's going a lot higher. I think, again, we're still going to get that chop in this range. That is my go-to on that. Also, just on that front, we're going to be talking about oil a little bit today too, because we're seeing oil prices just continue to do what I've talked about. The measured move, again, guys, puts us in the 30s. So I think this is coming closer and closer. We just had OPEC announce that they're gonna increase production at a time where oil is falling. They're increasing production. And the Saudis, I think, are basically doing Trump a solid, because Trump has been a lot nicer to the Saudi government than Biden ever was, basically stopping most communication with him and calling the prince a murderer. Not that he didn't murder somebody. He probably did. But not necessarily good diplomacy. If we look over here, the dollar, again, still looking weak. I think still breaking down. I think the dollar could go all the way down to 92, and I think that would be great. It would be really good for companies that sell stuff overseas. It would help a lot with manufacturing and exporting of goods, which is kind of the goal of the United States. And while we're here, just since this popped up, I'm just going to refresh here for the Bitcoin chart, showing that nobody is interested in Bitcoin, even though it's getting closer to $100,000. I love that personally. The CNN Fear and Greed Index, at least this morning, got super close to greed. I think just from performing really well last night. This probably isn't updated this morning, but this should drop back down into the lower end of the neutral territory. While we're here, I'm just going to jump over real fast. We had, again, I was gone Friday, but we had really decent data coming out. I'll talk about that in a little bit. But today, we're going to be seeing S&P Global Composite PMI, the Services PMI, ISM, business activity, employment, new orders. I'm imagining these don't look great. Service prices will be interesting. This is for April. So I still think we could see some front running and we could see high prices in here. We'll see what it looks like. So this should be very interesting. So we got a decent amount of data. First round comes out at 8:45 and then 9 o'clock. So all of our economic data comes in a little bit later today, but it should be a lot of fun. Real quickly, let me just check chat. Matt Nintendo says, good morning, Jess. Long time since I was able to join live. Happy to have you here, sir. A bunch of other people saying good morning. Nick finally got his Robinhood Gold card. Awesome, man. Did you get the gold or the metal gold? Either way, I think you'll like it. I did notice with the wife's metal gold that the gold is kind of wearing off a little bit, so I don't know if it's going to be super gold by the end. JT, good morning from Taiwan. We love you, JT. Hopefully you don't get invaded today. I'm just kidding. Hopefully never. Alex Garcia, chop week, at least till FOMC on Wednesday. Yeah, I think it totally could be. It could be chopped to down, maybe up, but we'd have to have a trade deal. JT, I'm going through what you were, man. Certainly hope I can replicate those returns. Oh, probably somebody asked about if I've ever blown up my account. So I talked about 2008. So that's probably what that's in reference to. Mike, make movies great again. Yeah, we'll talk about that. Anthony Yeo, who thinks Saylor will be the new Warren Buffett? I do. We're going to talk about that too. History Guy Scalps, the band of resistance, 96 to 98-ish needs to be broken. It's a very tough one. Nah, I don't think it's that tough. But I do think we need to have some good news that'll help with it, or just an increase in liquidity. We do have news about that we're going to talk about too, between China, South Korea, and Japan. So we'll be going over that. The old 21 billion ATM for MSTR is now fully spent. I think we have like 55 billion right now that we're looking to spend. So a decent number between the equity and the bond offerings. Nick, only the metal gold, unfortunately, but way better perks than Apple Card. It is 5%, dude. Is fucking awesome. All right, so we're going to listen real quickly here to Warren Buffett, some questions that were asked and his responses to them, and then I'll kind of interject. So 1 second here.
At Saturday's Berkshire Hathaway annual meeting, Warren Buffett answered shareholder questions for about 4.5 hours, including a question about whether he thought long-term the efforts of DOGE would be helpful or harmful. He said tackling the U.S. deficit is a tough job, but that it should be done.
We are doing something that is unsustainable, and it has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially, you just give up on it. And Paul Volcker, kept that from happening in the United States. But we came close. We've come close multiple times, and we've still had very substantial inflation in the United States, but it's never been run away yet. And that's not something you want to try and experiment with because it feeds on itself. So I wouldn't want the job of trying to correct what's going on in revenue and the expenditures of the United States with roughly a 7% gap, when probably a 3% gap is sustainable. And then the further away you get from that, the more you get to where the uncontrollable begins.
Yeah, his voice is rough.
And I think that it's a job I don't want, but it's a job I think should be done. And Congress does not seem good at doing it.
So that's good. At least he recognizes that. Let's keep going.
He talked about how bureaucracies everywhere are, not good situations, and said the government is the biggest of those bureaucracies and the most uncontrollable because you are spending other people's money. That's something he's always been opposed to. Berkshire Hathaway, a company that's worth about $1.2 trillion, operates with a headquarters staff of 24 people. Just the efforts at going after that, he pointed out,
I agree.
are very, very difficult. Congress is not going to be really up for the job. But he said somebody should be doing it.
Trying to see. Nope, they stopped there. There's other stuff. So there's other stuff about the actual trade deficit that I want to talk about too, that we're going to be going over. So again, I like Warren Buffett, but I don't know. I think he's over promoted. He's one of the reasons he has such a high return is because he's just lived a long fucking time. And again, he's a value investor, so I don't want to discount the return that he's been able to accomplish. It's actually really high. For value investing, especially over the last 10 years, not easy to get those kind of returns whatsoever. If you're a growth investor, that would look really like poor. But if you were invested in a Tesla, if you were invested in Bitcoin, I mean, you could have done way better, right? But you also have to think about the size of his account, which is massive. When you're dealing with really big amounts of money, it's not like you could buy some options or take this one-off bet and just make a fortune. You can to a small degree, but it won't necessarily be hugely impactful on your portfolio. I do want to talk, though, because, again, I think he's been sitting on way too much cash for a very long time, and it's unproductive, especially when you're printing 40% of the money supply. So we'll talk more about Warren Buffett throughout this morning. Hey, bro, do you have any idea what Grab, EMAs, meet going upward? I don't even pay attention to Grab. That's an Emit thing, so you'd have to look at that with Emit. I don't really pay attention to it. It's not a market I'm really familiar with. I don't feel very positive about the Asian markets right now. As far as money, especially China, but I think also maybe some bleed over. I don't know. I'm conflicted, and I just don't know enough about the market, and I don't want to invest in things I don't know well, especially when this is like peak Bitcoin season, and Tesla has FSD, and like there's just a lot happening. So I don't know. Mike, Buffett got as close to talking about BTC than he ever was. I can't remember exact conversation. Yeah, right. Just talking about currencies. He was talking about currencies and how if the dollar did blow up, you'd want to make sure that you own some other currencies. Bitcoin would be the one. It certainly wouldn't be the Chinese yuan. And again, I don't even think the United States isn't close to blowing up on its currency. I think that's something that a lot of people just don't understand, that are too optimistic on China. But yeah, you're right. Super close to it. Imagine they start buying MSTR. No, they won't. Alex Garcia, he is the true definition of time in the market beats time in the market. Yeah. But again, I don't want to be like, I don't know. I think there's better ways to invest than what Warren Buffett did. I think his era has kind of come and gone because value investing isn't exactly the type of investing that you want to focus a lot on during a golden age, which I think we're getting ready to enter. Now, don't get me wrong, a balanced portfolio to manage downside risk, because there is a lot of risk. There's war risk. There's all kinds of risk. But I don't know that, again, a value investor portfolio is a really good one for what's coming, even though it's something, again, that he's very prepared for. If we go into a depression, he's gonna do really well. He'll probably be dead, but his business will. Oh, one sec. Sorry, got to say goodbye to the wife and kid. And I did not get good sleep. I've been working out too much, and my body's just aching today, and so I didn't sleep super great. But I'm still going to try and rock it out. Morning, Jesse. Why would MicroStrategy not buy companies like CleanSpark and Mara to expand their business? It just complicates their business. Their strategy is buying the Bitcoin and becoming the Bitcoin bank. It's not necessarily the process of mining it. So again, everybody pursues different strategies. MicroStrategy is doing one thing, Mara's doing another, CleanSpark is doing another. All the miners seem to kind of have a different play. Iron is focused on HPC, high performance compute. So I don't know. I think they're just different strategies, and that's okay. Mike, Andy talked about hardness, just didn't reference anything. Yeah. He's so close, right? So close to talking about Bitcoin. MTN off-grid, NVIDIA reportedly considering added. Yeah, I saw that, and I just don't think that's real. Adding Bitcoin to their balance sheet. I looked at a site that looked at another site that looked at another site that said, "Hey, it sounds like there's speculation." So I don't know. I don't take things like that very seriously. There's no official. Yeah, there you go. There's Man Mahendra. There's no official confirmation. Ben Guy, good morning, everybody. All right, let's rock and roll. Let's talk about tariffs. Weirdly enough, what do I think of Metaplanet? I don't even know what the MNAV is. I could probably take a look over here. Let's see. Ballistic model. Nope. Is that it? Is this it? Let me go back. One of these has it. Metaplanet. There we go. Let me see here. I haven't even looked at MNAV in a while on Metaplanet. This is what's his name's. It's not Nate. What is his fucking name? Can't remember anymore. But the NAV premium is 3x, so it's got more of a NAV premium than what we have with MicroStrategy. But again, it's smaller, more volatile. So I don't know. People are very interested in it. I can't even invest in it. I don't think you can do that from the United States. So I'm not super interested in it. And again, including dilution, we're looking at a NAV of 2.32 on a strategy. And then when you look at sites like Mara, they have virtually none. And then let's see what Simler Scientific. I think this one doesn't even have a premium, does it? Or it's really low. It's 1.344 diluted. So that one looks the cheapest. It could go up a lot. But again, you got so many different companies trying to do this exact same strategy. Like here's Coolers. We don't even have Jack Mahler's in there with Cantor Fitzgerald yet. They'll probably have one of these boards up too. This one didn't even load. So I don't know. There's so many jumping in, but really MicroStrategy is the big one, man. That's the big fish. That's the company that's really doing it. And that's just going to be my focus. I think it's easier to focus on that. And it's a market I can get access to. Anyway, let's keep. Yeah, Dylan LeClaire. Thank you. God, again, I did not get a lot of sleep, so I apologize. But thank you very much, Danny, for that. Why buy the second and third when you can buy the best? That's usually the way I look at it, Mark. Totally. All right, so tariffs. Tariffs on movies, very strange. Let's talk about it. So Trump's talking about 100% tariff on movies. I don't want to spend a lot of time on this. I think it's kind of stupid, and I really don't give a shit. He said to kind of avoid propaganda. Maybe I can see some of that. I just think a lot of shows suck because of DEI. But I don't know. Maybe he's trying to win favor with Hollywood because, again, you're pushing potentially companies back to the United States. Or having more production and dollars spent in the United States. And with recent China basically shutting down Hollywood as part of the tariff fight, I don't know if it's something like that, or maybe just literally I don't know what he's thinking on this one. I really don't give a shit. Somebody said in here, a lot of movies are filmed in UK for the tax rebates. UK reward foreign studios to film there to provide jobs for their creatives and crew work. The UK is a big area for stuff like that. By laying a tariff, you're pushing more of them to the United States. Maybe. I really don't give a shit. I do think Netflix gets hit by this. And if we look over here, I asked this question yesterday, and today it seems to be true. Down over 6%. Almost all the stuff on Netflix nowadays is foreign. Like a huge amount of it is foreign movies and shows. So very fascinating. Definitely getting walloped today. So I was saying that yesterday, that maybe it was going to get hit hard. Looks like that's true. All right, real quickly, China getting hit. China hit by worker protests over unpaid wages, factory shutdowns amid turmoils. So you can see Chinese exports here. That's a horrible image. You can see Chinese exports to the U.S. falling dramatically. We're basically we're going to be at levels that are going to go to the pandemic levels. And then I think it might actually get worse than that. So we're seeing China exports to the U.S. is going to be a massive drop, just a massive drop. And I don't think people are ready for it. But it will be happening. And again, there's still stuff that's going to be shipped, but it's just one of those things where it's just crushing them right now. Let's see. It says China increasingly transshipping goods to U.S. via Vietnam. There's so much of this. So I hear people like Lynn Alden. I have so much respect for Lynn Alden. She's brilliant. I love her book, Broken Money, but she just doesn't seem to understand. She was originally quoting 15% exports to the United States, which is like a shitty grok search. Then she was quoting 18% in a recent weekend publication that she wrote. It's really probably over 20 to 25% of exports go to the United States. The numbers are huge. It's just they're doing transshipping. They're putting this to other locations like Vietnam, which is why we tariffed them so high. And then they're relabeling, and even if they don't do anything, they're just putting labels made in Vietnam, and then they're shipping them off to try and avoid tariffs. But this stuff, we're cracking down on all of this. And so the exports, the amount of impact to China is pretty high. If it's 20 to 25% of exports are coming to the United States, which I think it is because, again, of transshipments, that is devastating to their economy to have that freeze up overnight and have the vast majority of it stop. And by vast majority, I mean like over 60%, because there are things that are still going to be purchased no matter what. Again, protests are everywhere. I love that guy's voice. But you have protests all over the country, and you have other things. There's this revenge against society thing. I don't want to go into a lot of that. I might just show you just for like a second. Let me look here real quick. I don't want to show a lot of it, and I'm certainly not going to talk about what's on here. But stuff like this. There's a bus station up here. Just all these people fucking killed. And this happens all the time. And I won't show you all the gore. You can see it if you follow Winston. He gets this stuff from China all the time. But this is murder season in China. And I know that sounds weird to say that, but there's times of the year where people normally get laid off. After some of it's playing. I'll get it off here. But it's murder season in China right now. And so this is the time of year where after the lunar holiday, people just they hate China's society so much in the CCP that they start murdering people, and the way they can do that is by murdering other Chinese people because they're a part of the problem. They like to murder children the most. They've had to put things called bollards up around all the schools and like fences and gates to keep cars' ability to run over all the children when they're going to school and coming out from happening. But there's some videos where, man, and you don't see this stuff. You don't see this stuff because it's heavily suppressed. I see it, but you could see where people just murder like 100 kids with a car or a garbage truck or something. It's absolutely fucking brutal and disgusting. But you could see that the pressure is building up in China, whether it's unpaid workers protesting, whether it's people contributing to murder season. It's getting really bad there, and it sucks, and I feel bad for the Chinese people. Are you a blues fan? I don't even know what that is, Kirby. I am not a sport guy. I like mountain biking. I like hiking. I used to do rollerblading a lot. I do not know the sports very well at all. But things are getting rough in China. Things are getting really rough in China, which is a point I wanted to make. Let's see here. Morning. The wife and I love watching your show and crack up every episode. Thank you for taking us off the ledge daily. You're welcome. I'm happy to. Only request is please let us know when you won't be on because I totally restructure my morning. Okay. All right. I'll try to, man. All right, CNY. Oh, and in June, early June, I will be taking a week-long vacation, so I probably won't be on for that. So I'll give you guys a heads up once I finalize it. CNY, PBOC Governor Pan chairs Asian +3 finance ministers and central bank governors are meeting. So this is South Korea, Japan, and China. Agree to launch rapid financing tool under CMIM funded in RMB and other freely usable currencies. PBOC governor and Pan urges regional unity against U.S. tariff impact. So what they're saying is they're going to provide a shit ton of liquidity, these three countries, to ensure that there isn't massive impact within their economies, because South Korea, Japan, and China are heavily intertwined, and the largest trading partners of Japan and South Korea are China. So this will be very, very interesting. Pro tip, don't stream during that vacation. Oh, no, I won't be. I won't be, Neil. But yeah, so this will be increasing liquidity, and that's a good thing for Bitcoin. Bill Mitchell, again, will Hollywood still hate Trump now that he's putting a 100% protective? I don't know. Netflix getting crushed. Let's keep going down here. President Trump says he has no plans to speak with China's President Xi this week. People were asking about 12 hours ago, why are the markets going down? Why is Bitcoin dropping in pre-market? This is why. He said Trump says China is ripping us off, and Chinese U.S. officials are talking about different things. So, and from what I gather of that, there's just no clear communication between them. Tariff relief for small businesses. Let's listen to this real quick.
Are you considering tariff relief for small businesses?
Why do you always mention that, you pick up a couple of little businesses? What about the car business? They're going to make a fortune because of the tariffs. Do you know that the union, the head of the union, who was no fan of mine, Sean Fain, I guess his name is, right? He didn't endorse me. The Teamsters did. A lot of people did. A lot of unions did. But he didn't. He couldn't stand me. Now he's saying, wow, what's Trump's done for the automobile? I can't believe it. I assume he's going to probably now say the next thing he can say is, I endorse this guy. He's the greatest I've ever seen. He can't believe it's happened. He said, we've been waiting 40 years for somebody to do what Trump is doing.
So this is interesting. So a couple things to note here that I want to call out. So again, he kind of skirted around the small business impact. From best I can tell from a lot of Grok related research, from surveys that were done through, like, let's say colleges that are super liberal, and then some other economic sources that, again, hate Trump. They have between 600,000 and 700,000, 800,000 jobs being impacted in the United States that deal with exports, that deal with importing goods from China. I think the number is probably about 500,000 in reality that could be impacted by this. So it's not inconsequential, 500,000 jobs. But it is interesting to note that, and again, there's second order effects. There's other stuff. I'm still doing the research right now to try and make sure that I'm really clear on kind of what the impact is going to be. But there will be impact in the United States, probably 500,000 jobs. I think those can be offset with other with other jobs that are being created. We're going to talk about a lot of that. But I still think America looks strong. We're seeing a lot of investment dollars flowing in. That's some of the stuff I wanted to talk about with the GDP data that came out last week. From when I wasn't around, I wanted to kind of speak to some of that. But I do think he's right. The auto sector right now in the United States is going to be benefiting a lot from the tariffs that are in place, at least some of them, in regard to auto parts and just overall impact. And the biggest benefactor of that is going to be Tesla in a huge, huge way. And companies like Rivian, ones that are really working to produce in the United States. And that's the way it should be. We should be benefiting companies that don't have basically a huge amount of exposure to our largest adversary on this planet. All right. So another thing real quick here. So this is in regard to Warren Buffett, but I think it applies. Cameron Winklevoss from the Winklevoss twins said, how much of Warren Buffett's investment returns over the years were the result of investing in companies whose growth was the result of offshoring financial engineering at the expense of American middle class? I actually think it was a huge amount. So again, we can look at Buffett as doing really well for a value investor and all these things and living a long time to be able to reap like 5 million % returns. Yada, 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 long-term investor. There's a lot of good things that are in there, but there's bad too. Again, like this guy's a Coca-Cola, McDonald's, export our future over to China and make a bunch of money. He's a huge holder in BYD for a long time. They've been selling a bunch of that off, but had massive Chinese exposure. And his views on the deficit and things have changed over time. We're going to talk about that more later here, but it's just funny that more recently here, he's kind of shit-talking Trump in regard to tariffs and how trade shouldn't be something that's used as a weapon. I just think that's very interesting compared to his previous stances, which we'll be going over. UAE investing $1.4 trillion in U.S. Yeah, we'll talk about that. Looks like Ackman going on CNBS shortly. Maybe interesting. Ooh, yeah, we got to listen to Ackman. Thank you for that heads up. Let me go down here. I'm just going to move my screens around so I can keep an eye on that. And if I miss it, let me know. I'm just going to mute down in the corner. So anyway, you guys might have saw some people talking about the Seattle ports that are being emptied. This is the Seattle port. This is a Seattle port showing a lot of container ships. A lot of misinformation that's been going on about that. We'll be talking about it. And then a lot of people saying that this doesn't matter. But the United States trade representative said reviving apparel production in America is not a pipe dream. It was not that long ago we were manufacturing 56% of the U.S. apparel in America. Made in America is an economic and national security priority for this administration. And I don't know that apparel needs to be the top priority, but again, if you just look at the raping and pillaging of what's happened in the United States, 1991, 56% of the apparel for the earth was made in the United States. Less than 30 years later, 28 years later, 27 almost, it's only like 4%. So why did we give away all of our manufacturing jobs? And again, with robotics, we just don't need to. This whole employment thing, talking about, we don't have enough people to do this stuff. It's all bullshit. You can pay these employees really good working wages. They don't have to go to college, and they can become rich. They can become very wealthy. Simler Scientific just bought 167 Bitcoin to add to that 1,500 plus that we just saw MicroStrategy buy. Awesome. Andreas Steno Larson said, guess what this means? Yes, USD reserve accumulation and USD treasury buying from China. So this is not a popular narrative, but I want to throw it out there. Hong Kong buys record amounts of US dollars to defend PEG. Hong Kong intervened to defend its PEG, buying a record amount of US dollars after the city's currency rose to the upper end of its trading band. So what Andreas Steno Larson is saying here is that these guys, yes, USD reserve accumulation and USD treasury buying from de facto China, a weak USD is needed to allow the rest of the world to buy USDs. So we're still seeing the dollar drop, and we're seeing these guys buying our treasuries. This is beautiful. This is good stuff. This is not a narrative that's going out there very much. It should be, though. So far, if we look in the bottom corner, guys, we're still seeing, bottom right corner, we're still seeing Bitcoin finding support. It would be funny if Bitcoin found support here and then it broke up through that red line and started to go higher. That would throw a lot of people off. But anyway, let's look at the next one here. So Kobayashi letter, I said, China has literally been using, so this is funny. So this is Warren Buffett speaks out against tariffs, says trade should not be a weapon. What's fascinating about this is this. I said China has literally been using trade as a weapon for the last several decades as they steal intellectual property, prevent our businesses from being in their country. There is no Google. There is no Microsoft. There is none of this stuff. None of it gets past the Great Firewall. They don't allow they steal our intellectual property, and then our businesses have to leave the country as they're underbid by their competition that they were forced to partner with to begin with. And I said, all while strategically crushing different sectors that they want full dominance over, whether it be solar, whether it be steel, whether it be EVs. They literally crush the competition through heavy subsidizing and overproduction in order to be able to make it to where the rest of the world can't fucking compete. And so it's really idiotic to me that Warren Buffett all of a sudden is making these comments about how trade shouldn't be used as a weapon. And yet that's exactly what's been happening over the years. All right, I want to refresh here because I hate it when it restores. I want to get back to a comment here that I want to see. Let's see. Tom Lee was on earlier too. I didn't get a chance to see it. We can look at that. We'll pull it up. We can look at all that stuff because we've got the premium service, right? So we can look at all that. So again, China buying our treasuries. That's fascinating. Buffett being a hypocrite about China and trade, fascinating. Kyle Bass, China cries uncle and exempts 40% of U.S. goods from its tariffs in an effort to soften the blow of the trade war in its own economy. This is from the 3rd, so this is a few days ago. Said Bloomberg's China experts, the United States is dominating position over the middling kingdom and will reverse battlefield asymmetries China has accumulated over the years. Xi certainly blinked first after all his bluster. China's position, because again, we haven't seen really a lightening of the U.S.'s stance. Both Trump and Bessent have said very clearly that Xi has to come to the table first. And we haven't really done anything to make that any easier for him. And yet we walk back some tariffs, but again, we're doing that for our own self-interest. And people could say that same thing here, right? You could say that same thing here, but this is after very strong Mao-like rhetoric, literally referencing Mao, that they would not be doing anything like this, and yet they are. So it's fascinating. So Xi blinked at first. After all, China's position on tariffs is unsustainable, and a 40% walk down is evidence of the pain China is feeling. They know it must be fixed before Christmas orders go through. People don't realize this, but Christmas orders go through like now. So, did it again. They go through like now. So it's a really big deal. And they've got to move fast on this stuff. Really quick. Really, really quick. So Treasury Secretary Scott Bessent, again, meeting with Japan. I think we've done a lot of this, so we're going to move on here. I actually want to let's jump to China, then we'll go to U.S. economy. We got a lot to talk about. We got so much to talk about. Jesse, Ackman's coming up. Let me get over here, guys. Is he up yet? I don't see him up. Do you see the dollar weakening much further? Yes. Yeah, I do actually. I see the dollar dropping maybe right now it's at 99.51. I see the dollar getting down to 93, 92. You lost a lot of money in foreign exchange because I bought in GP. Yeah, that sucks. Yeah, that fucks you pretty bad, man. I get it. But yeah, I do see it dropping further. Apple is planning to sell investment grade bonds on Monday for the first time in 2 years. Yeah, that's fascinating. Apple is such a strange company. It's really survived the last decade through stock buybacks. In my opinion, they bought back 30% of their stock over the last decade, and with very little innovation. Again, good products, but really no innovation. I don't see the Apple car anywhere. I don't see really anything new. Now Ackman's not up yet. We'll go to him in a second. Anti-WEF cut down trees, install solar panels, and then block the sun because of the recent comments about blocking the sun from
Squawk Box.
We are in Los Angeles. Oh, so we might have Ackman coming up now. We'll go to it. But blocking the sun, which the UK is talking about doing in order to reduce solar warming or something. All to fix the weather. Meanwhile, made in China, just one coal factory. And we do have Ackman. Let's bring him up.
Forum.
Yeah, I'd say for Mike, he puts on an incredible conference.
Howard Hughes Holdings joining us live from Los Angeles is Pershing Square's CEO Bill Ackman. You're in town for the Milken Institute Global Forum.
Yeah, I'd say for Mike, he puts on an incredible conference.
And you just came back from Omaha from the Berkshire Hathaway annual meeting, so I want to talk about that as well. But this is big news because this is something that has been in the offing now for several months. You have raised your offer and your stake now. Tell us what's happened and how did we actually get here?
So I think it's been in the offing for maybe 30 years, actually. What I mean to say is, I came into this business. First book I read was Ben Graham's Intelligent Investor. The next thing I read was basically the Berkshire Hathaway shareholder letters, and it tells the story of Buffett buying control of a textile company and transforming it into a very valuable business over a long period of time. And Buffett's been one of my
How much of it went to China? Anyway, keep going.
most important heroes, certainly in business, and I would say in life. And I always sort of aspired to build a diversified holding company and turn it into valuable enterprise and have big shareholder meetings. And
Ackman's like a vampire. He's like a vampire in a lot of ways, I think.
all that kind of thing. So I've been working on this for a really long time. Now, this specific transaction, started actually, again, a long time ago. We bought 25% of a shopping mall company called General Growth before it filed for Chapter 11. I joined the board. And part of the way to make that company valuable was spinning off all the ancillary assets into a company called Howard Hughes. And then that's now 14 years later. And that business it started with a jumble of assets. And over time, the
wonder what we're getting here. I'm going to speed this up.
Correct.
Almost.
Correct.
It's a little bit actually like Warren Buffett, almost a controlling stake.
Correct.
The question is, when is it going to produce enough cash, like a Berkshire, effectively, that you can then take that cash and go invest it?
So first of all, the MPC business, let's just back up. Howard Hughes owns these sort of small cities. They're called master plan communities, but they're not small. Like, so for example, we own the Woodlands, which is about the size of Manhattan. Right. We own Summerlin, which is a major,
All right. I don't care about this. We can watch it. It sounds like it's just talking about Howard Hughes and his investment strategy that he's doing. I'll look at it later and see if it's worth anything. Let's keep going forward, though. So there's a lot of speculation. I actually like Gordon Chang. He does lean towards speculation sometimes, but in China, it's so opaque on what's going on with leadership that it's hard not to. But Vice Chairman of Central Military Commission Zhang Yaozhi, I don't know. China's number one uniformed officer and an adversary of Xi Jinping is effectively running the People's Liberation Army. Xi, for most indications, has lost control of the most important faction of the CCP. I don't know how true that is, but I'm very interested to find out if it is. I am hearing a bunch of chatter because, again, I follow a bunch of people that talk about China, and it does seem like things are getting loose. Laughing my ass, pronounce all these Chinese names. Oh, dude, some of them are easy, some are really hard, because some of them I've listened to for like the last 6+ years that I've really been following China closely. So some of it's easier, some of it's not. All right. So anyway, Rod R. Martin, China could lose up to 35 million jobs due to U.S. sanctions. I'm actually hearing most normal figures, 5 to 10 million, but there's also secondary and tertiary impacts. So this probably isn't too far off. China in Focus, though, is again a little on the edge of trying to make things look worse than they really are. Now, Besant said 10 million jobs very quickly. So again, I think that's a number that you could see very fast. 10 million jobs. So I just wanted to revert back to my comment from earlier. We're talking about small business jobs being impacted from the United States of 500,000 jobs. And again, we've got different sizes, right? So they're like 5x, 4x probably actually now the size of the United States. But we're talking about job losses that are 20x the United States for the impact, for those sectors, for immediate impact. So 4x the size of us, 20x the impacts. That's still a 5x variable there. That isn't good for China. Goldman Sachs predicting 10 to 20 million loss. So if it's 20, then we're looking at a 10x worse situation for China than the United States. Because again, we're the buyer, we're the one with the power. And this is because of supply chain disruption, logistical collapse, factory shutdowns. I agree. All those things are devastating. Youth unemployment in China may be as high as 46.5%, nearly half of young workers. I believe this. I think it's 13 million new graduates that'll be coming out this year and into the workforce, and there's no jobs for them at all. And they stopped showing this after they gotten into the 20%. That was years ago. That was like almost 5 years ago. They stopped showing youth unemployment. And so I don't even know what it is right now, but it wouldn't shock me if it was in 40% range. He said factory workers in Shenzhen say products stranded in containers, orders canceled, and jobs disappearing. They're stacking these containers as high as they can. There's no place to put the stuff. U.S. sanctions are crushing China's export machine, just like Trump said. An export economy has to sell, but our economy doesn't have to buy them. And again, you've got a closed economy. So if we're making up, let's say, 25% of China's purchases, at least 20%, let's say 20 to 25%, and we're 1/3 of the buying capacity for consumer goods on Earth, then China's in a world of hurt because they can't go anywhere else. If we buy 1/3 of the stuff that's sold on Earth and it makes up 20 to 25% of their overall sales as an export-driven economy, one that has already been crushed in real estate, one that has already crushed their technical sector and a bunch of others, one that is already oversupplied on a bunch of other areas and dumping things in other markets at a loss, and you just have a catastrophe. So local government employees confirm factories are panicking. There's mass relocations, production halts, workers fleeing cities, going back to home, trying to see if they can find any money. You got major iPhone manufacturing shift away from China. Again, looking to do almost all of their U.S.-made iPhone production in India, and then also switching large amounts of production to the United States for other things. 120 million jobs depend directly on exports in China. So again, we have, for imports coming in from China, we have, as far as like strong impact, if you don't include the big guys that can be that will be subsidied, and that includes like farming, that includes transportation, most likely, at least portions of it. And then again, auto sector and just a few others, rare earth, like other areas where you need the stuff and you want to help because you don't want a broader disaster. The U.S. will be printing for that reason. But these guys, that kind of number is fucking insane. And again, if it makes up 25% of their economy, then that 30 million number does not sound nuts at all. So this is devastating to China. I just want to reiterate that, guys. This is devastating to China. It is not good for them. Also, something nobody's talking about. My friend Jake, I don't know, I haven't seen him a lot in my feed, but he likes to talk about China investments a lot. And I think like Baba and all these others. I hope he understands that the chance of us delisting, because just to get people in the United States not to invest in China, because again, that's our goal, right? We don't want American dollars funneling into a broken system. It's better to nip that in the bud now than if people are buying the dip and spending a fortune, right? So there's a delisting coming. I'm almost sure of it. I'd say before the end of this year, we'll see a delisting of Chinese stocks on the U.S. market. Again, they don't let you invest and they don't let Chinese invest in U.S. companies virtually at all, right? I don't even know if there are any that you can invest in overseas outside of Hong Kong. Maybe you can get access, but outside of that, there isn't. And so for the average Chinese person, and so we're going to do that same thing. We're going to repay them with a like for like. South Korean soldier recruited in an online chat spied for China. The CCP has massive espionage operations in democracies around the world. Again, I think I don't remember what the number was. I think it's like $230 billion they spend a year on propaganda, both internally and externally. And their external is the most effective. They really, really spend a fortune trying to manipulate Western opinion. And it's just insane. All right, we're going to jump out of China here, but that's kind of a big deal. All right, let's go to U.S. economy. Then we're going to talk AI and chips. Then we're going to talk Microstrategy and Bitcoin and all the rest. So we've still got some time. We've got about 45 minutes until the market opens, and then our first data point doesn't come for about another hour. All right, so let's go here. So U.S. economy, number 4, Trump tariff narrative assisted the liquidity drop-off, exaggerating prices to the downside. There's a big market versus sentiment disconnect. Liquidity leads asset prices, roughly 3-month lag. this gives the context that we need to apply to SPX and BTC price corrected and went deeper than it should have, thanks to a narrative-assisted bearish move tariffs, a move that was largely overdue by the recent liquidity hiccup, DXY spiking to 110. So we've had a narrative-assisted bearish move with an improving liquidity backdrop. This is a setup for a very sharp reversal. Now we have people crushed, sidelined, and scared, wondering why prices are slipping away. This is going to be the most hated rally ever. Again, global M2 is only going to pick up. We just talked about South Korea, Japan, and China all working to create more liquidity. We talked about reasons why the United States would want to do that to subsidize impacted sectors. Definitely, they always subsidize the farmers. So there's going to be a lot of things that are changing here in the near future. We got all these pro-growth policies we're going to have probably by the end of June. They'll want to do this before the 4th of July, getting it to where we have these tax breaks in place across the House, Senate, and signed by the president. So when you're looking at all this, we're seeing the S&P go higher. We're seeing Bitcoin go higher. That is the way you should be invested. Again, I don't even think we break through the green in this bottom corner, guys. I think we keep going up. That's the most painful trade. And I just put in here my oil price target of low 40s and high 30s is looking a lot less crazy right now. I didn't reiterate that very much because, again, people don't want to hear it. They're like, dude, you're fucking insane. They're like, I'm sorry, you're saying we're going to go from the 80s and 90s down to the 30s, but every indication is pointing that we're doing it. And I also, guys, I want to make reference to this right over here. I called the top in oil too. When all these commodity guys, first off, I don't think a lot of people realize that oil could go negative, but the pandemic taught us that, right? And then we had this massive spike, but then I told people, hey guys, this wick right here, this is the end right here. When you have a monthly wick that looks like this, it's over for oil. Now, it got up higher, but then it rolled over, and look at it ever since. So people when we were at 130 a barrel, they were talking about 200, and I just knew that was never going to happen. And nobody loves this, but the measured move, guys, of this, right? The conservative measured move of this from the breakdown zone is into the 30s, and everything we're hearing from OPEC, all this stuff that's going on, global slowdown, all this stuff, narratives of massive liquidity. This is usually when markets melt up because they're going to see rates coming down. We're pricing in over 4 rate cuts, a whole % drop. We're talking about slowdowns in economy. We're seeing the dollar dropping. We're seeing oil dropping. This is the time where you see those kind of crazy moves to the upside. And that's what I'm trying to prepare people for. The Kobayashi letter said, we're going to talk about MSTR and MSTX actually here in a second. I think they'll keep going, but again, today they're down. I think MSTX is down like 5.6%. Already recovering, though. We're going to have some economic data, though, coming out that's going to impact that. We'll talk about it more. Even at 10 million jobs, it's all trickled down. Yeah, JT, you're right. Will you be hosting CleanSpark earnings? Yeah, I should do CleanSpark and Mara, I think. I want to be a part of both of them. So, yeah, I'll be doing that. I don't know when they are. I should probably know that. Let me look over here. When are the earnings? Let's find them. Mr. Calendar. You know what? On that note, we should actually, there's something else we need to look at too. Let me switch this real quick to only favorites. So today we got Palantir. I will not be covering that. That's all admit. Cypher, I don't care about. CleanSpark and Mara, are they on the same day? I'm probably going to do Mara. Not going to lie, I'm probably going to do Mara. I'm most interested in Mara. And then I'll probably have CleanSpark like on a backup, and maybe I'll make a separate video of it and watch it later. But I'm most interested in Mara. That's where the bulk of my money is because it's been going up the most. And they've got the by far biggest stack of any miner. And that's what I love the most. So I still like CleanSpark. And again, very different sizes between all of these. Mara has a market cap, as of this morning, of $5 billion. CleanSpark has a market cap of 2.47. So very different sizes. But Mara is going to be the one I think I'm going to focus my energy on. All right, let's keep going. Kobayashi letter. Goldman Sachs expects their 3 Fed rate cuts. Okay, well, 3 is still high, but I think it's going to be more than that. Because I think the global slowdown, I think the deflation coming out of China is going to be huge, but we'll talk about more of that in a second. You invested more into CleanSpark. Yeah, but I have more in Mara now. So, yeah. Yeah, things go back and forth, but Mara is the one I care about the most because I think actual Bitcoin holdings are huge. And so that's the one I'm going to do for the video. Kobayashi letter breaking the confidence board leading economic indicator, the lei or Li, whatever you want to call it, fell 0.7% month over month in March, the biggest drop since October of 2023. This also marks the fourth consecutive monthly decline. U.S. consumer sentiment and stock prices were the largest negative contributors. I actually don't really think much of this indicator. But you can see, though, what's fascinating about this is if you look at 2008 collapse, right? If you look at this, the thing was down near the bottom. This bottom right over here is in 2009. So this was basically at the bottom of the market, right? Look at how far we've fallen already. So even in worst case scenarios, they're talking about the bottom being like over here if this is anything like the great financial crisis where we thought the banking system was going to collapse. So I don't know, man. I feel like we've done a lot already. That's my take. Brian Feraldi says insider selling is mostly noise. I agree with that. Insider buying is mostly signal. And so why are we looking at this? Because it shows the corporate insider buy-sell ratio shows that we actually were in seller selling for a while, right? If you look over here, we were pretty neutral for 2021, and then 2022 when we really got into the bear, at least within the tech side of things. We were in the negative, so they were selling. Insiders were selling. This is the Amazon, or these are not buying, I should say, and selling. But now we have climbed back since 2022. We just keep climbing higher for corporate insider buying versus selling, and that is a really good thing when you've seen the stock market, the S&P, going down. So, and it shows the win ratios of the 1, 2 month, 3 month, 6 months, and a year later. And a year later, 100%, median returns 17.8, average returns 31%. So what they're telling us is a melt up, yet again, not a popular narrative, but one that I truly believe in. CleanSpark got a piece of property to build a new mining warehouse. Got the info from Rex. Yeah, I saw that. That's great. And again, I own both of these guys. I've got large quantities in both. I'm going to pick the Mara one for the call because Mara goes in a bunch of different directions. And I like Zach. I love the whole CleanSpark crew, but I believe the most interesting insights are going to come from Fred with Mara, which is why I want to listen to it. And again, with Mara, over 21% of my portfolio versus 15% on CleanSpark. So if anything, just based on self-interest alone, that's the call I'm going to do. Or else you're going to go make me watch. Yeah, watch Rex. Go watch Rex. There you go. Watch Rex. Seth Golden, he said, in my opinion, until something materializes to the good with China trade relations, market unlikely to give. I said fair, but I don't actually know that that's true. I want to preface this a little bit differently, and it looks like we've still got Bill Ackman talking. I wonder if there's anything interesting when they drop the final video. I think with the actual recorded final videos, not the live stream, I think I can speed those up. If I can, I might go to that and just see what he has to say, or save it for tomorrow if there's any highlights. But I want to add a caveat here to what Seth said. I actually don't think it's China. I think that we can go higher if we got an India trade deal that shows that we're shifting to India and that we're building a stronger relationship with them. And we're going to talk more about India in a second. Actually, I might even do it right now, real quickly here, because this is probably a good time to frame this and then jump back. So India. So I wanted to talk about this. India's values and objectives match the U.S., not most of Europe. So what is this? Let's just listen.
Look, when we look out at the world, Samir, we look for partners.
Who is this? This is the foreign affairs minister of India talking about his relationship with Europe. And you can ascertain from listening to this that what they're talking about is their values more align with the United States. Let's listen.
We don't look for preachers. Particularly preachers who don't practice at home what they preach abroad.
And he's talking about Europe. So remember this. So maybe talking about like freedom, democracy, other stuff like the climate, whatever. He's making reference to the fact that maybe they're not so great at it.
And I think some of Europe is still struggling with that problem. Some of it is changing. So the issue for us, I mean, in many ways, Europe, I think, has entered a certain zone of reality check. Now, whether they are able to step up to it or not, it's something we will have to see. But from our point of view, if we are to develop a partnership, there has to be some understanding, there has to be some sensitivity, there has to be a mutuality of interest, and there has to be a realization of how the world works. And I think these are all work in progress to differing degrees with different parts of Europe. So some have moved further, some a little bit less.
I'm so tempted to make.
So I think this deals with a couple of things. I think to a lighter degree, it deals with the fact that they're dealing with their own issues with democracy and turning into a dictatorship and censoring a speech and all these other things. I think it also references, without saying it, China and the fact that these guys are still embracing China when they shouldn't. And what they should be doing is embracing India. And again, also there's a lot of barriers to entry in Europe. Even within Europe, in the European Union, there's tons of barriers just between countries in Europe. So I think a lot of this is just in reference to that. And again, and somebody said, when's the deal with India? I don't know. This week, next week, doesn't really matter to me if it's 10 days or if it's 20. I think it's going to be the first one. I really strongly believe it's going to be the first one. It's the big one. It's the one that you want to announce first, and maybe some others just trickle in quicker that are really good deals, and it gives the carrot to the markets to let them know to go higher. But the one that's been planned for a long time, and I remember listening to Modi talking about his meetings with Trump, and it was so positive. This was a long time ago. This was like months ago, near the beginning of his presidency, and talking about his meetings with Trump and how they're going to work well together, and just framing it as this is the new partnership for the world in regard to manufacturing, software, just working together. And so I think that's coming really, really quickly, and people are underestimating it. And so I think that a deal like that would be great. Foreign minister has served as an ambassador to the USA, China, and Czech Republic. He is quite experienced. Yeah, and again, he's smart, and I think he understands the world a lot better than a lot of other people do. Barron's Online, big money poll sees the largest amount of bearishness in 30 years. So it says, where did all the bulls go? All these publications, the Financial Times, the Wall Street Journal, Barron's, they're all liberal trash. Because all their vested interest is in the Democratic Party that was giving them tons of money and buying their subscriptions. The party of big government, and that's what they're backing now. But it says the percentage of bears in our latest big money poll is the largest in 30 years. Where the pros see value now. Where did all the bulls go? The bulls are making money. The bears are getting ready to lose a fortune. Ryan Detrick. 87% of the S&P 500 stocks are above their 20-day moving average. 52% are making 20-day highs. Once again, these aren't things you see in bear markets, but you tend to see things like this early in new bullish phases. We're going to talk a lot about that. My friend Michael Arawat says, Germany, the new safe haven for investors. He should have put a question mark because that's what he meant. He said, folks, Germany is in structural and not a cyclical crisis. Its industry is imploding while its population is aging fast. More debt and some infrastructure investment won't solve structural problems, overregulation and lack of innovation. 100% agree with this. The only thing that Germany has going for it is austerity. So they don't have a huge debt to GDP. So they can do a lot of spending. But again, that just provides liquidity, which ends up helping Bitcoin and broader markets. It doesn't necessarily mean that it's going to be super beneficial to Germany, a country I love, but sadly is falling apart. Why is it falling apart? I want to talk about that real quick and use this as a segue for a geopolitical part of this conversation. Before I get there, though, I wanted to talk about this. Romania, a country that had the EU literally imprison the last person that was trying to run for government, who was getting like 25 to 30% of the vote. Anyway, that was the third attempt I think they had at trying to overthrow the election in Romania. Well, Simeon, I don't know how to say his name, got 40%. On second place at around 20%. So they crushed this election. So the conservatives crushed the election in Romania. The stuff in like orange here are all the areas they won. And again, 40% of the vote. So Romania has made it very clear that they want the far right to control. And this is going to be, so the first time they did this, far right wins the first election in Romania. The election is canceled by the courts. Then far right leads poll of redo election, leading candidate is banned. Then a third guy just won with over 40% of the vote. So overwhelmingly, Romania is saying fuck you to the European Union, which is good. And this kind of leads into my next conversation here about Germany. So Joe Bhakdi, he talks a lot about Tesla. He's a good guy. He reposts my stuff a lot. He said the dude on the left, governor of a state, just denied the gal on the right, Anna Nguyen, MP in parliament, the right to join a political trip because Anna, daughter of Vietnamese immigrants, is now considered a secured right-wing extremist, while the guy on the left is totally fine and not at all an authoritarian anti-democrat. You can't make this stuff up. The German Uniparty, Karen Faeser, and her little private spy agency has completely gone off the rails. So if you guys don't know this, they're literally calling the AfD an extremist party in Germany right now. They're acting like Nazis. It's insane. And so I think, again, this is some of the reference that we're seeing from India in regard to what's going on in Europe. It's some of this craziness right here. So, and I think that's a big deal, and I think it's problematic. So I just wanted to throw it out there. So let's jump back over here. So I said lower house prices are coming soon, along with lower rates. So this is from Lance Lambert. He said active U.S. housing inventory for sale. If you look at the numbers here, they're going up, or starting to now. So if you look here, in 2025, we're actually ramping up. This is good. We haven't seen these. 2017 and 2018 and 2019 were the times where we saw higher numbers of inventory, and eventually that rolled over because there's seasonality to it. But we're seeing a very strong uptick in inventories. I think that uptick continues as we see market prices going down. And as we see inventory opening up from lower rates, because again, I think we're going at least 1% lower. And I think the 10-year will drop even more than that. Right now, it's really high. It's still 4.33, but I do think that's coming down too. So I think you're going to see house prices dropping a lot in the next year, which is going to be good. And not across all economies. Like where I live in the Midwest, it's it's like a much better environment. So housing prices might not drop at all. They might just keep going up where I live. In the city I live, because there's so much growth. It's one of the fastest growing places in the country. Blockchain, wait, don't lower rates cause houses price to go up? So I wanted to answer this. I said normally the answer would be yes. Lower rates would cause housing prices to go up because I made the reference that the rates are probably going to go down. But I said normally the answer would be yes. Wait, don't lower rates cause house prices to go up? Yes, okay, yeah. And I said normally the answer would be yes. But the unique thing in this case is that existing home sales, which normally make up 80% of home sales, have been frozen for several years, over 3 now, 3.5 almost, since the end of 2021. Because the Fed started raising rates at the most aggressive rate in history back to the end of 2021. So what we're going to see this time will be rates coming down while inventory continues to build. And then we'll see existing home sales pick up and increase inventory even more. Should be a nice downward spiral for prices. Plus you'll see, and again, slowing macro, slowing world, add all that in. So money printing, slowing world, rates coming down, and home prices coming down because, again, you priced out a lot of the market. So I think it'll get a lot better, and then when it opens up, it'll really open up, and then we'll find a balance. So we'll see lower prices, we'll see a bunch of liquidity, we'll see even lower prices, we'll see rates coming down, housing being more affordable, and then we'll see probably maybe the end of this year or beginning of next, we'll see a ramp up in prices again is kind of what I'm thinking. For anybody who was curious, that is my thought. All right, let's keep going here. So we got past Germany, we got past housing stuff. This guy right here works at Blockworks. I can't remember his name. He also does forward guidance. He's really great. I don't always agree with him, but I agree with him a lot lately. He says, looks like Treasury buybacks are going to be ramped up. Very interesting. So again, this is from April 30th, but I wanted to reiterate it right now. Given the success of buyback programs since its launch last year, Treasury believes it's an appropriate time to consider ways to improve efficacy. According to Treasury, will evaluate a broad range of possible enhancements, such as changes to maximum purchase amounts, buyback operation scheduling and frequency, security eligibility, that's interesting, maturity bucket composition, execution process, and counterparty eligibility. And considering these options, Treasury will be guided by the objective of financing the government at lower costs over time. Treasury is committed to engaging, so they might do a Janet Yellen over the short term and do buybacks in order to be able to ensure that rates are coming down and we're still doing enough issuance to be able to push debts along. Again, we have 7 to 8 trillion worth of debts to refinance this year. It's a lot of money. But I think there's very creative ways in order to be able to manage all that, and I think we're going to be seeing it. I've got to get caught up with Michael Howell because I haven't heard anything about him in a while, or seen what he's saying just because I've been so busy looking at other stuff. So I'm going to get abreast with that here by tomorrow morning. I said oil prices are not going up. So this says OPEC Plus plans to increase oil production growth and may cancel voluntary cuts of 2.2 million barrels per day by the end of October. So again, they're increasing it. They're not slowing it down. The global oil prices are likely to keep decreasing, causing substantial problems for the Russian state budget and war effort. So again, we're working hard to try and prevent that. Sarah, we love Sarah. She says U.S. growth still set to outperform this year and next. So again, if you look at projections here, the IMF real GDP, the International Monetary Fund, not a big fan of the United States with Trump in office, said GDP growth forecast for G7 countries. And if you look here, the U.S., it shows going down into 2026, but look at the levels of growth here versus Europe. They're way higher. Now, they say Canada's going up in 2026. Bullshit. UK, France, Japan, Italy, and Germany. So they're making it look like we're going down and all of these are going to go through the roof. I don't think you're going to see a lot of that growth. I think you're going to see a lot of spending, but I don't think you're going to see that level of growth that they're projecting. And I think the U.S. will actually outperform, and that will blow these guys away when we see that there's a better 2026 and sitting in front of us. Also, Seth Golden said smart money just flinched. Bearish divergence as of Friday with SPX, SPY markets going higher, yet smart money flow index faltered. Exhaustion and/or a pause may be needed before another leg rally. And I think that's, again, what we're seeing today. I think that's true. So if you look down over here, the SMFI, so you got the smart money flow index and you got the smart money buying and selling activities. So you can see how this climbed a lot with the smart money index. So they've been buying a lot since the end of April. And so he's saying, hey, we had like a record, 8 or 9 days. So he's saying, hey, it might be okay for a time for a cool off. I actually agree that could happen. We could see it for a day or two, or maybe most of the week. I don't know. Ryan said, did we just see another 19% near bear markets? I think so. So this says another 19% correction. And all he's saying is that we saw the big drop. And if you look historically here at all the other times this happened, 1976, 1980, 1990, 1998, 2010, 2011, 2018, and now 2025, where you saw basically a 19% drop, like a large drop. It's actually showing 16 to almost 20. When you see that, the length of correction in trading days, and this was super short, it was one of the record lowest. 1998 is a comparison. 1980 is a comparison, and I love those kinds of comparisons, honestly. And even 2010, as far as the shortness of this. It says the 1 month, the 3 month, the 6 month, and the 12 month, we're seeing 25, 30% return 6-12 months out for the S&P. That gets close to the 7,000 number that I keep talking about, the 7,200, 7,300 level for the S&P. And so I think that's coming. Anyway, I think that's it for the U.S. economy. Many Chinese exports bound for the U.S. have been rerouted to Canada to skirt tariffs as the trade war continues. I wouldn't say many. Some, not many. Yeah, and again, it doesn't matter. It doesn't matter. So one thing I want you to understand, crypto, is that over 30% of U.S. of purchases around the world for consumer goods are from America. We're in a closed ecosystem. Unless Mars or the moon starts buying China's shit, there is nobody else. So can there be a different trade relationships between these? Sure. Can they offset some of the pain in a minuscule way? Yes. But they can't offset the vast majority of it. They are fucked. And I want to make sure that you understand that because it's really important to get that. Next, the UAE, United Arab Emirates, picks America over China in the global AI arms race. So you've got India picking America over China, and you've got the UAE. You got all the smart, powerful nations of the world realizing which side they need to be on. Now, are there Asian countries that have a more complicated situation and that will have to, walk a fine line between both? Yes, but Abu Dhabi is not one of them. Abu Dhabi's tech giant G42 is going all in on the U.S., not Beijing, as it races to become one of the world's most powerful players in artificial intelligence. With $1.4 trillion investment plan aimed squarely at the United States, the UAE is signaling a strategic pivot. America is its partner of choice for AI dominance. G42, backed by the oil-rich emirate and chaired by National Security Advisor Sheikh Tahnoun bin Zayed, has quietly launched G42 USA in Delaware and is expanding rapidly into American cloud services, chip-making, and AI infrastructure. The company just pumped $335 million into the U.S. chip maker Cerebras after cutting ties with Chinese suppliers like Huawei to meet U.S. national security demands. It already counts Microsoft, Silver Lake, and Ray Dalio's firm among its investors. This move isn't just economic, it's geopolitical. As China and the U.S. compete for AI supremacy, the UAE is placing its bets on Washington. This is so much money. You got China with a slowing, failing economy in so many ways, and then you have $1.4 trillion coming into the United States. I just want to reiterate that number. It is huge. It's a very big deal. Let me see, what else do I have here? Microsoft's getting ready to bring Grok AI to its Azure AI Foundry platform. The move could rattle tensions with OpenAI. Satya Nadella reportedly wants Azure to be one of the homes for all major AI models. That's really smart. That's probably it on the AI front. There's probably others in there, but I don't care so much. Let's go back over to... Let's see here. I'm going to check defense and energy. We're going to go to energy. Energy is important. We're going to talk about energy. So this is from the Office of Nuclear Energy. Look at this. This is amazing. So they're showing the size of these small nuclear reactors compared to a car. Nuclear reactors which cannot melt down. And they're saying, so how big is our microreactor? Our Marvel reactor will roughly be the size of an average sedan and produce enough energy to power 10 U.S. homes. 10 U.S. homes? 10 U.S. homes. I don't think that number's right. I got to find a better post. I'll see if I can find it and let you know. I'll let you know. All right. Anyway, let's keep going. U.S. Department of Energy. This is actually the U.S. government. The global race for AI is the next Manhattan Project. We will expand energy and access and infrastructure resilience to win. So this is the U.S. Department of Energy telling you that their next Manhattan Project is AI and expanding our energy infrastructure. I would take that very seriously. Google's training electronics so AI doesn't melt the power grid. AI is eating so much electricity that Google's now throwing $10 million to training 100,000 new electricians because robots need juice and the grid is already crying. So again, everybody is looking to expand the energy grid in a massive, massive way, and I think that's a really good thing. Man Mahindra says SKechers SKX just announced it has agreed to acquire to be acquired by 3G Capital for $63. I don't know what that... Skechers? Are you talking about the shoe company? Not really something I follow. But let me see here. Office of Nuclear Energy, Department of... Okay, here we go. This might be better. So powerful progress. Nuclear is off to a fast start under the Trump administration. Here are 11 key accomplishments. This is the one I'm looking for. From President Trump's first 100 days. 1, restarting Palisades Energy made 2 loan disbursements to repower the Palisades nuclear plant, which would be the first recommissioned commercial plant in history. 2, unleashing American SMRs, small nuclear reactors. In March, Energy reissued a $900 million solicitation to support the deployment of small modular nuclear reactors to better align with President Trump's bold agenda for American energy dominance. 3, permission to build. Dow and Exxon Energy Nuclear submitted a construction permit application to the NRC Gov in March for a proposed 4-unit small modular reactor plant in Seadrift. 4, Halua on the way. 5 U.S. nuclear developers received conditional commitments for energy for high assay, low enriched uranium to support innovative American-made nuclear technologies. 5, New Heights, Southern Nuclear, loaded nuclear fuel enriched above 5% by developed with the support energy into a commercial reactor for the first time in the United States. 6, do you guys get the impression that we're focusing on nuclear energy? Fast nuclear fuel. INL conducted the world's first safety test on a high burn-up fast reactor fuel in more than 20 years at its transient reactor test facility in collaboration with Japan's Atomic Energy Agency. 7, American-made super alloy. Research created a new super alloy that shows promise for use in future advanced reactors and could reduce U.S. dependence on China-sourced cobalt. 8, nuclear-powered rockets. ORNL developed a new high-temperature test bed to advance research on nuclear thermal propulsion rockets, which could one day be used to transport crewed mission to Mars. 9, molten salt test loop. INL debuted this revolutionary test platform that will support development of advanced reactors using molten salts. 10, perfecting the recipe. Researchers found a more efficient way to produce the fuel that will be used in MCRE, the world's first fast spectrum salt-fueled reactor experiment at INL. 11, civil nuclear in Poland. On a 99-day POTUS first 100 days, Secretary Wright met with Polish and industrial leaders for the signing of an agreement in Poland's first AP1000 civil nuclear power plant. There is so much going on. So much going on. I need to make sure I'm following all these too. Right now with energy, and I think this is great. Goldman Sachs still bullish on gold? Okay, I'm not. And by that, I mean it can still go up, but I wouldn't focus on it at all. It's all going to be Bitcoin. Energy, Rod Martin. I think I already went over that. Yeah, I already went over this one. So again, just a bunch of things. And then Canada going the exact opposite route on energy. So the growth projections from the IMF are probably not going to look good for them. Just saying. Let's see. Defense and war. See if I got anything good in here. Nope. Nothing really too new. All right. So let's skip that. We're going to go to Department of Government Efficiency, and then we're going to go to Bitcoin and Tesla and MSTR. Breaking Warren Buffett. Okay. We already know that. Elon Musk. Yeah. I just want to show this real quick.
We've actually found there's a lot of people who are federal government employees, they're active employees who nonetheless applied for and have received unemployment insurance.
100,000 active government employees are receiving unemployment insurance. Amazing. Let's listen to this real quick here. Oh, wait. Did I already do this one? Nope, I didn't. All right, 1 second. We're going to listen to this. So this is, well, you know what? We won't even listen to it. I'll just talk to it. CNN asked if Doge was a success, and they said yes, unequivocally. Even my liberal counterpart admitted as much. There is no question that Elon Musk managed to do what no one thought was going to be able to do. So they're like, well, I don't know if it's the right thing to do, blah, 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 but they said he was effective at it. And this was great, guys. If you missed this, I didn't talk about it because I was gone again on Friday, but let's listen real quickly here. This is Doge. This is the Doge group talking about some of the things that have been going on in government. It's fucking insane. I want to play it real quick, and I might have done just a little bit of it already, but I want to listen to this.
Yeah, and so it was by far the least peaceful agency that we've worked with.
That's not big balls.
Ironically.
Of course.
Additionally, we found that they were spending money on things like private jets, and they even had a $130,000 contract with a
Big balls
former
is next to him.
Taliban. This is real. We don't encounter that at most agencies.
Yeah.
What was the money going to the Taliban for?
So it was a contractor. They received $130,000 for generic services. And to Elon's point, there was not actually a clear description of what the contractor services were for.
But was it for opium?
Unclear.
Or weapons?
Or nothing. Or nothing.
Or abroad.
Or nothing.
And you actually have to ask the question, how did we get here? Like when the country was founded, there were only 4 agencies. Today there are over 400. So there's been a 100x increase.
4 agencies to 400, 100x.
The number of agencies since the founding of the nation. And thanks to President Trump, he's now signed 2 executive orders to start to reduce the number of agencies in the government, and the Institute of Peace was one of them, which is why our team went in to try and understand what was going on.
And the Institution of Peace had heavy arms in the Institution of Peace. They had tons of money. They rented out arenas for parties. They spent a fortune. And then at the same time, they were funding the Taliban and everything else. It's just insanity. And they deleted 1 terabyte of data so that they could hide a bunch of this. Again, just absolute craziness, guys. DHS and FEMA terminated 3 grants totaling $24 million to a city of Denver, which was being used for migrant shelters. There's just a bunch of this stuff going throughout here in regard to Doge. They're still working. They're still doing the job. David Sachs and Elon Musk both ended up having to step back because they only get 120 days a year that they can help with private contracting. So you just got to realize that this stuff has not stopped. They've just put the mechanisms in place. They're still meeting weekly at 10 o'clock at night to get updates and to talk about next steps. And these guys are still working very aggressively. Riot to start selling BTC. Only Mara and CleanSpark will prevail. It's interesting that they're selling Bitcoin right now as like a focus. CleanSpark said they might in the future, and there'll be a point where they should start to. I don't know the details in Riot. All right, let's real quickly. Vivek said $2 trillion BNY Mellon Bank buys $68 million worth of strategy. And again, somebody said like, oh, they're $2 trillion and they only bought $68 million. They bought $68 million of Microstrategy. And there's more places doing that. I want you to see this. This is a comparison of fiat and Bitcoin from Coinbase.
If a Bitcoin was the size of a quarter, all 21 million of them would fit inside a single shipping container. But to fit the dollars the Fed prints on average every day.
So again, this is for you to understand the limited supply of Bitcoin and then reference what that looks like in fiat terms for size.
You'd need 72 shipping containers. Each year, you'd need 26,280 containers. And to fit what they've printed in the last decade, well, you'd need a lot more than that.
I got to hear something real quick. I got to make sure I heard that right.
All 21 million of them would fit inside a single shipping container. But to fit the dollars the Fed prints on average every day.
That's the part I wanted to understand. So the Fed over the last 10 years is this number back here. The Fed over the last year is this. So, and then Bitcoin is this tiny little thing at the bottom. And this is only the United States. China is dwarfing us with money printing. So this is just perspective for you guys to understand what the year outlook looks like, how tiny this vessel is compared to this vessel, and how much larger this vessel can get just in regard to money printing, not already the existing stores of value of the $300 trillion bond market or any of these other markets that exist, art, real estate, everything else, right? So it's a really good visualization, I think, of all of this. Bitcoin historian, 75% of U.S. merchants plan to accept Bitcoin and crypto within the next 48 months. Capital One survey. Merchants accepting crypto and Bitcoin, 75%. What the fuck? Bitcoin Teddy, only 0.27% of the global population can own one Bitcoin. And that number is going to be even harder if companies like Jack Mallers and, Kenner Fitzgerald have anything to say about it. Meta, Simler Scientific, MicroStrategy, not to mention all the pensions and countries around the world and states that are starting to get into this, cities that are getting into this. Roswell, New Mexico, I think it was, buying Bitcoin as a strategic reserve. So it's going to get harder and harder. I said excited for this. Hopefully it's made in America and not highly dependent upon China. Square or Block or whatever is just done fucking horribly. But I do like the fact that they're working on an open source Bitcoin miner coming to the market this year. If they do anything, at least they're doing that. Andy said, I know some Bitcoiners are mad because the price of Bitcoin's been going down since Trump took office. But ask yourself, did you really want the Democrats leading the country? The Democrats are fundamentally against Bitcoin and crypto. It's in their blood. And that's 100% true. And not even just in regard to Bitcoin and crypto, but do you really think Kamala Harris would be excellent right now for your portfolio? Maybe over the short term, but what is it going to look like in a year, 2 years, when we're at war with China and they're winning and we have done nothing but hollow out everything and just print tons of fucking money. Be happy with what's happened. JNAP says, I'm all for Doge, but I have to agree with the liberals here. If what they're finding is true, why are people not being prosecuted? You need to understand that the prosecution arm, first off, it's not an easy process to go from finding corruption, building the case, and then creating a line of prosecutions, because they're going to be massive ones. And there will be many people that are prosecuted. It just doesn't happen instantaneously. This reminds me of somebody else. His name's Gunther. He's a big, Trump guy. And he was talking about how Mike Johnson has just been pathetic and hasn't done anything because he hasn't gotten anything passed in the House yet for these tax benefits and just all the other stuff that they're trying to codify. It's like, you must not know how these systems work, because the Department of Justice isn't just going to be like, hey, and a prosecution and a prosecution and a prosecution, just like Congress doesn't easily push anything through. These are bureaucratic, not easy, especially judicial by its nature in this country is meant to that people are innocent until proven guilty. So you have to build the case, and they're building a ton of cases all at once. And trying to prioritize them. So you have to be patient. People have to be patient. You have to be patient with investing. You definitely have to be impatient with you have to be patient with Congress. And the judicial system is not quick either. So I'm sorry, that's not a good Democratic point at all. Anyway, so yeah, be happy you don't have Kamala Harris in office, because you'd hate it if you did. If you didn't hate it right away, you would eventually, when our country has breadlines. I said, imagine how much upside Buffett has missed over the last 10 years. So again, Bitcoin's been around for that time, right? Buffett's cash position has went to 63 billion, 85, 92, 120, 136, 140, 149, back down to 109. So he did put 40 billion to work at the right time in 2022, and I think that was really smart. Then he went back up to 157, 277, $348 billion in cash. Lots of money sitting in treasuries. But this is at a time since from here to here, he's added $200 billion in cash at a time where we've printed 40% of the money supply of the earth. And he was smart enough to wait, so I got to be fair. 2020 is when it happened, right? So about that 140 billion just got fucked because we printed 40% of the money supply. So the amount he was making from his T-bills was jack shit compared to the money that was printed away from him from the U.S. government, and the assets, and what the assets would have gotten in value if they were put to Bitcoin or put to other things since the pandemic. He could have made a lot of money. Palantir, all these companies, NVIDIA, all these tech companies, of which, again, they're not focused, but that money would have been better spent somewhere else. And now he's got a really huge cash position, and I think it's at the wrong time. But again, they're being conservative. It's what they do. But I just want to say that $348 billion in cash is a lot of money, and people all the way from 2015 to now kept saying, oh, he's adding to his cash, the market's going to crash. And only really for a very short period during the pandemic, and then for 2022 was that really the case. So you had about 14, 15 months where you could have just made a lot of money. And then again, 2018, when the Fed raised rates just as a test, whatever, that was one too. So let's say 16, 17 months, you had some money opportunity. Oh, the casino's opening. Let me get that up here. Everybody likes to hear the bell for some reason. Makes them happy.
That still keeps you kind of intact in terms of this latest range that we're trying to
That's the pre-market.
Let's get the opening bell on the CNBC Real-Time Exchange with a big board. It's Mexican Real Estate Corporation Vesta with Executive Chairman Lorenzo.
All right, you got your bell. There you go. Market open. Now we'll let that stock heat map refresh just a little bit, and then we'll go back here. But again, so my whole point is that cash hasn't really been your friend, and the yields on your bonds haven't really been your friend for a while, since 2020, right? It hasn't been the best use of capital. Again, there are times what did I make? I made 600. I made a huge percent return In 2023, I think it was 600%. It was just a stupid amount of money, 600% across the portfolio. And so, again, it's one of those things where we'll see who's right. I'm pretty sure I know where we're headed. And I think I'm going to be proven right. And I think the money printers are going to go burr because that's what's happened since 2008. And it can't slow down. It can't slow down. If it slows down, we get a depression. And nobody wants a depression, especially at the beginning of a golden age where we're trying to lower energy costs, where we're trying to increase growth, where we're doing that by lowering corporate tax rates, allowing full deductions of all the stuff being spun up. And then at the same time, we're embracing Bitcoin and crypto and innovation coming into this country. We're applying pressure to our adversaries overseas. We're telling people to invest in the United States, and they're doing that. And there's something else we're going to look at in a little bit. I actually might have missed it. I've got to find it. Maybe I have to go down further in the U.S. economy section, but it's just in regard to some of the GDP data where we saw growth, and it was really good. Chicken Genius says, sell everything. Don't listen to him. We'll talk about that in a little bit. Bitcoin LFG, big breaking. Apple, $3 trillion just dropped its iOS ban on in-app Bitcoin and crypto payments. Again, not a lot of people talking about this. That was a big deal. Post-Trump tariffs, Bitcoin has outperformed stocks by a wide margin. We're going to see that continue. Tech dev, gold goes parabolic. Then liquidity breaks out, flows to BTC, plus rotation from gold sends BTC parabolic. Not an original story. I agree. Not an original story, but it's going to be a good one. Just in, Ministry of Home Affairs tells states to train students for mock drills amid India-Pakistan tensions. Yeah, I believe it. It's probably like mock war and nuclear drills. He also said to sell Palantir like $10. Are you talking about me? All right, cool. Let's see here. Let's... Chicken. Oh, you're talking about Chicken Genius. Yeah. So I said to sell Palantir. I got that wrong too. So I got that wrong because I said to sell. Where did I say it? It was right around here. I said to sell around here in the 20s, and I bought down here and I made 600%. So I said to sell too early too. People get that. Chicken Genius has had a few hiccups like that. He was big into Rivian. I tried Rivian, and then I backed out of it right away. He thought Rivian was going to replace Tesla. I think he's liberal in nature. Again, he's in the Asian territories. I think he's got like a little bit of a Meet Kevin syndrome and Jeremy syndrome, and just all these other guys right now have a lot of these problems. And we're getting our down day, guys. We got MSTX down 6%, Mara down 5.52, CleanSpark down 5.45, Tesla down 2.22. So we're getting kind of that drop. I might put some money to work this morning. We'll see. That's the vibe I get too. I listen, but take it with, yeah. And I've got a very different worldview. Time will tell which one is right. I'm going to be right. But, yeah, we'll see how it goes. So this person, Urian Timmer, said, ironically, gold and Bitcoin are negatively correlated to each other. As the chart shows, both assets have been taking turns lately, as measured by Sharpe ratios. There's a bunch of dispute here. I don't really care. The whole thing I wanted to say is they do end up kind of taking turns running, and I do think that that's happening. Ash, thank you for the one gifted membership. I appreciate that, man. So I do think that's happening. I think we're going to see more of that. And I think it's Bitcoin's turn, and I'm going to stick with that. Gold up 2.34% on the day. So it is beating Bitcoin today, which is down 0.18% after closing the week a little bit down as well last week. Publicly traded company Thumbs Up Media just announced a raise of $200 million to buy Bitcoin. It's a lot of Bitcoin. And again, we looked at this last week, but I want to show it again. It's the BlackRock official recommendation is a 2% allocation to Bitcoin. And again, just look at this, guys. So we already talked I showed you that visual representation of Coinbase showing Bitcoin versus just the money printing from the United States government. And then look at equities, look at arts and collectibles, look at gold, look at real estate, look at bonds, look at app. And again, that's the money supply. There's so many areas where Bitcoin could pull 1 or 2% from and just go parabolic. And again, BlackRock said digital assets like Bitcoin it's decoupling and could spike institutional demand, risky to own it, or risky not to own it. And I think a lot of these others I've been through. Former PayPal president says Bitcoin's new money grid that will settle trillions of dollars daily. I agree with all this. I'm not going to go into all of it. Let's jump over to MicroStrategy real quick here. and get that done. We've got about 10 minutes until the first round of economic data, guys. And as you know, we'll probably drop off around 9 o'clock here, a little bit after. But we get S&P Global Services PMI, and then we get Canada here. Canada should have happened. Let me see what Canada's is. Might be a precursor of sorts. Nope, it looks like they're coming out at 8:45 now. Or no, they just dropped off the grid. Do I not have Canada on here? All right, I don't know where theirs went. It just disappeared. Maybe they're not reporting today. Some kind of breaking news on Trump plans to raise millions from crypto and meme coin. What do you mean by that? Roy, thank you for joining. Let me know what you mean by that, or what he's saying, if he gives any indication of what he means by it. So again, we know we got our 1,895 Bitcoin today from Michael Saylor. That's great. What did they buy it at? They bought it at an average of 95,167. People are going to be like, oh, they should have bought lower. It's already at 94, 93. Okay. But again, we're finding support, or appear to be finding support in this range. We'll see if we hold it. Could get a wick down. Will Clementi, I still love Will. I think he's great. He said Berkshire and Microstrategy are kind of the same, except one is hoarding USD and T-bills, treasury bills, and the other one's hoarding Bitcoin. One utilizes its insurance float, and one utilizes accretive BTC share dilution and the convert market. I agree with that, actually. BitPain has been arguing back and forth with Josh Mandel. I think they're creating a friendship here. Josh said he likes him and would like to hang out with him instead of Michael Saylor. Interesting comment. But he said Michael Saylor owns 20 million shares of MSTR. He's more incentivized to maximize the long-term value of the stock than you are. Lower your time preference, please. I agree with that. Preston Syke said, people ask me about Berkshire Hathaway all the time. Here are my thoughts. I'll be sure to post this chart during the shareholders meeting each year. Let's keep track of the performance. So he's got Berkshire Hathaway versus MicroStrategy, and Berkshire Hathaway is becoming less valuable versus MicroStrategy, and he's saying that that's going to continue to happen, and I agree with him. Ragnar said, Saylor, on MNAV, if we want MNAV of 4, 5, 6, or 8, we need to develop the credit markets. But make no mistake, MSTR, common equity, is the principal metric for shareholder value creation. The goal is to maximize the price of MSTR. That's how we define winning. And again, it's just got the slide deck here in this 1 minute and 33 second presentation from Saylor. Let's listen.
And we're going to pursue credit ratings for our fixed income securities. So the credit side of this is really important because, as you could see from my torque and my multiple calculations, the thing that will drive our outperformance, that allows us to achieve a 2x BTC return or get MNAVs of 4, 5, 6, 8. If we want to drive that up, if we want to drive our performance up, if we want 2 times or 3 times the volatility of BTC over time, then we need to develop the credit markets. And I've thrown a lot of metrics at you, and I've talked about a lot of things. We have a lot of security. I'm
not going to go into all the rest, but what he's saying there is it's important. Like, again, the Moody's credit agencies, all these things, they want to make it. And they've got like the highest amount of investment between ETFs and options and all these things. They're like the number one player on earth right now. So it makes sense that Moody's starts to give them a credit rating. And if they do that and they come up with these metrics, they're probably going to be really high. It's going to be much better than the CCC credit ratings that we're probably seeing today. The triple Cs, which would be hugely beneficial for them, allow them to be able to tap the markets better with Strike and Strife and just all this stuff. Sorry for the confusion. Just breaking, Kyron about the dinners Trump is holding for Trump coin holders. Yeah. Oh, okay. Yeah, I know he was. It's funny. I ended up having to sell it. I sold it because I had to pay taxes, but it worked out exactly the way I thought. I was saying that Trump was going to provide some kind of utility, some kind of like hanging out with me thing, in order to be able to get more people to hold Trump coin. And then that's exactly what he's doing. I don't know how well Trump coin has done recently. But I know it did get a pump shortly after that news announcement. We'll see what he ends up doing with all this stuff. Buying some MSTX here. I might do the same. Tesla's down. MSTX is down. I don't know. I might just wait a little bit, though. I want to see if we go lower. But I might do the same. I'm already so allocated to to Bitcoin. British Hodl, everyone excited about S&P 500 inclusion for passive flows is missing the big picture. So everybody is excited about this. They want S&P 500 inclusion, and I think they're going to be eligible after Q2, guys. I think Q2 is going to blow the fucking doors off when it comes to how much money they've made. If we're anywhere in the 120, 130,000 range for Bitcoin by the end of Q2, it will be phenomenal. It'll be the most insane fucking quarter anybody's ever seen, and it will drastically change things. So you'll get the passive flows benefit of people funneling money into the S&P 500, and that going to benefit MicroStrategy. But more so is what British Hodl is saying is the main benefit for S&P 500 inclusion would be the hopeful acceleration of MicroStrategy's debt being classified as investment grade. So again, this will help. These will feed off of each other. I think Q2, Q3 for MicroStrategy could be fucking sick. And these are huge narratives to drive the price up. Now, a lot of the times, like I remember back in 2017, everybody was like, "Oh, we're going to get an ETF on Bitcoin, and we're going to do this. We're going to get these markets to open up. There's going to be options on Bitcoin." And when the news events actually did come, and the news for the ETF was a no-go, but we did again get markets opening up for Bitcoin, and the news dropped for the CME and the other areas where they were able to spin up. When that happened, those were the sell the news events. So it's going to be one of those things where you want to ride this train until you get close to the news actually coming to fruition, and then you'll probably want to get out. And we'll talk more about my strategies for that. I'm still fleshing it out in my head. Probably going to be some shorts, but I need to see where we're at. But so they're saying, hey, triple credit rating is greater than S&P 500 inclusion. I agree with that because again, opens up a $300 trillion fixed income market and makes S&P 500 passive flows look like child's play. Right now, we don't have access to that full $300 trillion because of the investment grade need, and that's what he's trying to do. So I don't understand fully why Josh Mandella's have got so many problems with Michael Saylor right now. I think Michael Saylor's taking the right approach. We're still going to have to tap the equity markets to be able to buy more Bitcoin. He doesn't seem to want us to buy more Bitcoin right now, Josh Mandel. He seems to think that that's a bad idea. I actually think it's a brilliant idea because I still think we're going a lot higher, and we're going to do that very quickly. And we could be looking at the end of the 4-year cycle in a longer term and less volatility and more upside up and to the right from the S-curve adoption. And if you guys don't know what S-curve adoption looks like, you should learn. S-curve adoption image. Let me see here. If you guys don't understand the concept of an S-curve, it's happening right now. And S-curve is like just a wicked ramp. And so let me just pull up one here. So this is talking about the S-curve of Bitcoin, but and it's actually even steeper than this as far as the visual representation. But like early majority is probably over here. You can see where there's a ramp that increases a lot. And then it tops off, and then it's slow with the laggards, right? I think we're like somewhere over here. We're in a parabolic move higher. So is Tesla. And so if we're seeing that coming, then I think it's the right move for Saylor to be as aggressive with his strategy right now as he can be. Before the cycle is over. He needs to slow down the higher we get, slow down substantially, right? He didn't do that so much last time. We'll look at the orange dots and talk about that. And I think he should be buying more at the bottom, but he can buy more at the bottom without as much share dilution if they get that investment grade status and that S&P inclusion. I think all those things happen this year. But it says Berkshire Hathaway is a 20th century Bitcoin. That's what Saylor says. Jeff Walton said, so this is off of a comment from Josh. And I like Josh. I like Josh a lot. But he said, so somebody put understood, which is why BTC price matters the most. And that's why Saylor took steps to reduce these risks. Debt is staggered with average maturity greater than 4 years in an extreme bear market. So he's basically saying, hey, we don't have to worry about a lot of dilution. They've staggered these debts over a long period of time. This is really smart what they're doing. And so for some reason, Josh referenced then Citibank. He goes, Citi never went bankrupt either. The government just practically nationalized one of the largest banks after falling into a dilution spiral. So he's insinuating that strategy is going to have this, right? Note this is just a bit of history for those too young to remember. I don't know. I don't like playing the old age card. I do every once in a while, but I don't like doing it. If you don't like learning, please don't read. I don't want to hear any bullshit comments for taking the time to pass along a bit of history, whether you think it's related to any topic whatsoever. But he's making this topic in regard to MicroStrategy, right? He's literally trying to reference this in regard to MicroStrategy, but then he doesn't like people referencing MicroStrategy in it. So I think it's weird. He talks about the pre-crisis peak and how they were doing a bunch of dilution and then what it fell to and how it basically went bankrupt, dropped over 95%, 98% actually. But that was also the great financial crisis. So a major event, and maybe he's saying that we're heading towards that. I don't know. He talks about this in depth. I'm not going to go through all of it. And he talks about TARP and just all the things that went on with the great financial crisis. But the thing that I thought was interesting is Jeff Walton then says Citigroup was highly leveraged, 15-1, 20-1 asset to equity ratios, whereas MicroStrategy is 1.2-1. So he's saying, like, I'm sorry, I can't relate to this because the ratio of leverage just isn't as high, even though Bitcoin and MicroStrategy are obviously going to have higher levels, or I should say Bitcoin's going to have higher levels of volatility. It won't in regard to the fact of what we saw with the great financial crisis. And a great financial crisis-like event would actually help Bitcoin because of all the money printing that would occur would inevitably flow into this. So I'm really confused here. Like, I think this was a really good point. And then Josh Mann said, Citigroup fell victim to fiat. It's a nonsensical statement, Jeff. I said that I was making a post about history. You turned it into MicroStrategy. No, dude. I like Jeff, Josh, but you turned this into MicroStrategy because you took a conversation about MicroStrategy's debt and whether or not their dilution is going to be problematic. And then you gave us a history lesson talking about Citibank going bankrupt during the great financial crisis. And then when Jeff says this is nothing like Citibank, you lecture him for it. I don't think that's the right thing. I don't know if he responded to me. Let me see. No, he didn't. So I said, why didn't you respond to the actual comparison that punter Jeff made? So I like Josh. I think he's a cool guy. But Josh does need a hug. He does need a hug because I don't know what he's trying to accomplish here, but I don't get it. I don't get it. I don't get it at all. Somebody said, Sawboss said the two Canada numbers came in at 41.7 and 41.5 respectively, both green. Those are still contraction territory, which is not great. Roy Hernandez, Apple undersold. I don't know. I don't like Apple. Ash, sorry for confusion. Just breaking Kyron about, that was the Trump thing. Amit, buying some MSTX here. Connor H1, sell MSTR this week for more MSTX. I don't have any MSTR. Or I guess I have a little bit. I probably will buy MSTX. I wanted to buy Tesla this week, but I'm probably going to buy MSTX. I might do it in a second. I'm sitting on the sidelines today. We'll only buy if we go lower. MSTR could test 345. We'll look at levels in a second. Grant Cardone, thank you, EC, for the $10. Grant Cardone Cardone Capital just announced buying 1,000 Bitcoin. Are you shitting me? That's fucking awesome, dude. This is just, guys, if you can't see the flow of what's going on right now, I don't know what to tell you, man. I'm not following Cardone? Wait, I'm following a Cardone. Which Cardone am I following? Who the fuck's this Cardone? Oh, that's Gary. God, I keep forgetting the twins. Keep forgetting that shit. Where did you see that? Can you tag me in that? Maybe you already tagged me. If you guys didn't tag me, tag me. Let me refresh here. Speaking of delusional, that Me Kevin post, fucking A, dude, he's nuts. Me Kevin has went fully off the rails. Why did you sell TLT? Because I don't think bonds are good right now. I don't think bonds are a good investment right now. I think that has to be proven, and I think it could take a little bit longer than I expected. Fire, let me see. Fire. Okay, no fire. If you guys could tag me on that, that'd be great. All right, so let's see. Josh is MSTR derivatives trader, and Sailor doesn't care about derivatives. Yeah, he probably doesn't. Steak and eggs, I believe that 90,000 Bitcoin is the future floor, so technically speaking, it's time. Yeah, I think 90 to 92 is the floor. It might even actually be like real soon. But I do agree. I think 90 could be the floor again. Steak and eggs. In other words, I highly support MSTR stacking hard here. Agreed, totally. History Guy Scalps just sold some Metaplanet for a double in a few days. Is last week's U.S. subsidiary news. It's causing the run up. I don't know. Kirby Text, Josh is trying to detract attention to his 444,000 prediction. What did Kevin post? Oh, Kevin's a dipshit. Let me find it real quick. He's just insane. And don't get me wrong, I'm pro-Trump lately, right? But I can justify why. This is insane, though. Look at this. So he says, I despise the first 100 days of Trump. I did not vote for this. Literally, I didn't vote for Trump. Oh, okay, so you're just biased. I said I'd write in Meet Kevin, but besides secure borders and 2 genders, thanks for those, these first 100 days have been a complete unmitigated disaster. So I don't know if he's talking about the lower dollar to be able to help our exports. I don't know if he's talking about lower energy prices, lower egg prices, lower wheat prices, lower in most commodity prices. The fact that we've got massive amounts of foreign direct investment in our country. I don't know if he's talking about all those things, but it's been a complete unmitigated disaster. He said, our economic reputation has been ruined with poorly thought out tariff attacks. I don't know if that's true at all. In 100 days, it's only been 30 days, bro. Like, what the fuck? We have not reduced weaponization of justice. We've increased it. That in no way is true. He has to show an example of that. He has none. We've emboldened Russia and China. How have we emboldened Russia and China? We're literally lowering the price of oil, crushing Russia right now to where they can't fund their fucking war. And we've launched the largest tariff increase in China in history, destroying them utterly and cutting them off from 1/3 of consumer durable good buys for the world. So how have we emboldened them? Putin is back to talking nuclear weapons and hoping those don't become... Really? We haven't ended the war in Ukraine. I'm sorry. He's the only person even trying to. It's not his fault if he can't get both parties to come along. We did get a mineral deal with Ukraine. We have a spineless Congress more interested in making Trump the Pope than rightfully limiting his actions. Evidently, he doesn't like memes either. We have lost due process and respect for the Constitution. You don't have to give due process to people who never fucking had it when they came into this fucking country. I'm sorry. Illegal aliens don't get due process when they shouldn't fucking be here to begin with. That's for citizens. We have pardoned indicted criminals for the same things Trump makes allegations against Democrats. Again, no examples of anything. And we brought to the White House the golden age of grift, from approvals for billions and Trump golf courses to exclusive meetings and clubs. So meme and rug pulls. So I'm sorry, his meme coin, whatever. That's his shit. That's his shit. He can do whatever the fuck he wants. Is he using his position in order to be able to enrich himself? Yes, he is. He's doing that. That's the only fair comment in this entire fucking thing. But he also is paying for a ballroom out of his own fucking pocket and doing a lot of stuff on his own. So I don't know. I don't understand Meet Kevin. It's like he's not even trying to find the truth. PMI, 50.6 versus a consensus of 51.2 and a forecast of 51.2. So again, you were talking about numbers for Canada sitting in the 41s. We're still in expansion territory, even though these are less than expected and lower than previous. They're still better. That's for the composite. The services is 50.8. They're expecting 51.4. So these are worse than expected. They should give a reason for the Fed to lower interest rates. Market is taking a little more of a hit. If we look over here, we are seeing that. Well, maybe not totally seeing. It's close. It's pretty red, right? Netflix is bouncing back. I don't know if we made something better for Netflix, or maybe they figured out they weren't as impacted, but they're coming back. So, but this is just the stupidest shit. Stupidest shit ever. Just very biased and idiotic. Very biased. He's a fucking idiot. I can't even listen to him anymore. He's just a fucking moron. So anyway, do you guys, I had to find that Grant Cardone, Bitcoin Grant, or let's just do Cardone. You know what? I think did Gary get Grant into this too? I feel like he did, which is awesome. 1,000 Bitcoin worth 100 million. I love it, guys. We're seeing the golden age. We're seeing everybody jumping into this shit right now. This is very exciting. Very, very exciting. Let's go back over here. I don't know if there's much else. So we got the 9 o'clock coming in about 5 minutes. I'm going to do this. I'm going to hit the restroom real quick, get some coffee. I'm going to play this out. We're going to go live over here. Actually, we're going to go back a little bit because they're not even talking. I'm going to let these guys talk for a second. We'll hear Wells Fargo on consumer health. I'm actually going to go back a little bit because this might be interesting. Okay, right here. We're going to let this play, and I'll be right back. Give me a second.
I'd love to get started in the same place I did with Mark Rowan a few moments ago. Sort of your view of the macro and what you're seeing right now. Things seem to be changing almost on a daily basis in terms of at least investors' views. How do you see things right now in terms of uncertainty, in terms of whether things have ground to a so-called halt, which is something that actually Mr. Rowan referred to as sort of occurring right now when it comes to allocations of capital?
I would definitely separate what the markets are telling you and what we're hearing from our clients versus what they're actually doing, because you see two very different things. There's no question that people are concerned. There's no question that businesses are concerned. And they're trying to think through how they have to react to what the end game can be in the tariffs. But at the same time, what you see is, from our standpoint, our customers, whether they're consumers or businesses, in terms of their actions, they're very, very consistent. So when we look at spend levels in our card business and our debit card business, there's very little change overall. Now, they're reallocating what they're spending on. There's no doubt that some are pre-buying, but that's just, they're buying more goods and they're spending less on restaurants and travel and things like that. But the overall health of the consumer overall is still very strong. And when we look at the companies we do business with, the underlying facts are still strong because it hasn't filtered through.
Right. Well, I guess that becomes the question now. When are things going to start to filter through? Do you have an answer?
Well, I think it depends on what the outcome of the tariff negotiations are. If they come out in a way that's favorable, then you could wind up with a really, really good scenario for the economy. It'll take some period of time to get through this uncertainty. But if the numbers are significant and affect how companies do business, then you will see a reduced level of investment. You'll see certainly people stop hiring and possibly some downsizing. You'll see a more significant recession.
Yeah.
So
Chamber
we're preparing for all the outcomes. I mean, because
it's impossible.
We're in this unknown period.
It's
all right. What I miss?
Impossible. There does seem to be a hope, at least, that there is going to be some sort of a deal with a number of countries, or at least the agree.
Yeah. How's his little pee-pee? How's Kevin's little pee-pee doing? Is he having problems with his little Peter getting it up? Oh, yeah, it doesn't even exist anymore. He had to chop it off. Fucker. Fuck that guy. Support for TSLL and MSTX, you don't want to look at those. You want to look at the actual stocks. And we could do some of that. Here, I'm going to do this. I'm going to switch to live. I'm going to mute this. I'll bring this up in a second because, again, we're going to get more economic data. And it's going to be very important economic data. So let me look over here. So we'll pull up. So first off, Bitcoin could still drop, but I think it's finding support. So I want to point that out. Bitcoin is still finding support. It is just not dropping. Let me zoom in just a little bit in the bottom corner so you guys can see that. So could it still drop? Yes, it could. But let's say it doesn't drop. Let's look at MSTR. MSTR is down today, but it's also right near peak volumes. Over that lower time frame, we could drop to maybe like the 360 range, something like that. If we had really bad economic data, we could do that. You could even get down maybe to the 350s or something like that. That could happen. So I think you need to be minimally prepared for that, guys. Google, yeah, we can look at Google. Not my favorite stock at all, but we can look at it for sure. I do like Gemini's not too bad. And again, they've got so many. YouTube is such a huge thing. People discount how much time is spent on YouTube. It is a huge amount of money. But yeah, so I would say between if we get more bad economic data between like 362 and 350, really great buy zones on MSTR. So if you see that on MSTR, then you go over to MSTX, you buy it at whatever the fuck it's at. That's how that works. You look at the underlyings first, and then you come back to that. Let's do this, though. I want to pull up Tesla real quick, and then we'll also go over and look at Goog. So Tesla really needs to get above this peak volume. It kind of is still, right? Wow, that's beautiful. So could we back test? We could back test. I mean, shit, down to 260 technically. I don't know that we need to in any way. In any way. There's so many good things coming. Over the short term, though, if you can get it, I mean, if we drop down to like 270, or again, if we got down to the 260 range, this is a no-brainer for me. I would buy it in a heartbeat. I'm probably going to spend more of that. Oh, you know what? I could do that too. Shit. I forgot. I'm going to keep an eye on this. I forgot. I didn't realize how much Tesla I had. I knew I had TSLL, but I forgot that it's 9 o'clock. Let's check this economic data. Okay, so we got 51.6. That is better than expected for services PMI. Wow. Better than expected, guys. What the fuck? Business activity, 53.7. Better than forecast. Services employment, better than forecast. Services new orders, better than forecast. Service prices, high. Only one thing negative here is the service prices are high. Outside of that, this is pretty fucking amazing. Wow. Okay. What? Better? Did you guys see better? I don't know if I saw better. But Bitcoin's bouncing fucking hard here, bitches. Time to spend your money, guys. Spend your money. I'm going to do it right now. Spend your money while you can. The window is closing. The window's closing, guys. Buy. Buy. Fucking buy. Fucking buy now. All right. Let's see. 2,000. All right. I just bought $20,000 in TSLL. I'm going to probably do that on my wife's account because I didn't realize she had like $130,000 in Tesla. Just Tesla. And I think I want to go TSLL right now. Or do I? Let me think about this. I didn't know I had that money before. Should I do that? Should I be cautious? Should I be cautious in TSLL? Greedy when others are fearful. I'll probably leave that alone. I'll leave that one alone. You know, I might just do a little bit. We'll just do a little bit, right? A little bit didn't hurt anybody. You know what? I'll wait. I can't figure it out. My brain's full. This is great. All right. Let's listen to Rick Schmantelli. See what he has to say. This is fucking great. I can't imagine anybody shit talking this stuff.
We had S&P Global final April earlier. They both deteriorated to the lowest levels on the service side since the fall of 23. Now these are ISM April reads.
No, real quickly, Victor Hernandez, then we'll get back to this. Hey, Jesse, do you think Powell will just look at a big guy against Trump, will hold rates at same level? So do I think Powell will just spite Trump until his term ends in like May or whatever it is? Jesse, is the mic too sensitive? Is Mike a person? What about this? How does this feel? Do I think he would just spite Trump and ruin his entire legacy, destroying the markets and being blamed for all of it? No, I don't. I think as an act of self-preservation, he will not be doing that. Berkshire shares are down 6%. Wow.
51.6 is the service indice. That is stronger than expected, higher than the rearview mirror, best since February of 24. Now, if we look at the prices paid component.
Did anybody think at all that we would have to worry about everything being too strong today?
65.1. Once again, this is zooming. We're expecting a number around 61. Our last number was a whisker below 61. This is the highest since Jan of 23. And in this case, highest is not a good thing.
It's not that bad.
On the new order side, 52.3.
Again, guys, I just want to look at the rate of increase. We're right over here, right? So look over here at what happened, the steepness of the pandemic and how prices got. We haven't been doing any money printing. These are one-time lock-ins, and then they roll over. We are not, it isn't a concern, and people will figure that out soon enough, okay? So that's just not a big deal. Let's go back to Rick Schmantelli.
best since Dece of 24. Once again, better than front and back, meaning rear view mirror and windshield. Finally, the employment, and of course, we know in the rearview mirror, we had a good jobs report. This number is the only one that's in contraction territory, under 50, 49, but that's still better than expected and well above 46.2 in the rearview mirror. 49.0, believe it or not, is actually the weakest, and the first time under 50 since June of last year. We were at 47.8. Now, what we want to really pay attention to here is the fact that these readings, the strong readings and the prices paid, are pushing yields higher. If you notice, right now we're at 434
Yeah, it's not much.
in a 10-year. That's up 3 basis points.
I want to counter that real quick because we were at 4.33 earlier. So we were sitting right here, and now we're right up here. So again, you get the inflation narrative because of the fact that you see prices paid going up, but this is not much of a move. It's like 0.5%, and it's not a new high by any means. I mean, look at this. Lower high, outside of the wick, lower high. So there's nothing concerning here to me. Nothing at all on the 10-year. I'm not even worried about it. Not even worried about it. Worried about China's, but that's a different conversation.
Points on the session. It had been gravitating near unchanged. We want to pay particularly close.
Rick will not retire, Sea-Dog. He will just die one day on set. There'll be one number that sends his blood pressure through the roof, and he will just die.
Attention to this area
Oh, Bessent's coming on at 11, guys. That's something to look forward to.
right now, 434. It's been a very important high-frequency pricing point. Any type of a yield close above it most likely continues to push rates more to the upside than the...
You guys know we're seeing Rick Santelli die live on air. You got to admit, that's what's happening, right? That's totally what's happening.
Downside.
He'll be turning purple one day, and it'll just be over. And it'll be Leisman's fault. How poetic would that be?
Which reversed last week. Sarah, back to you.
Okay, Rick Santelli, thank you very much. Good setup for
If that really happens, I'm going to feel horrible.
some of our
I love Rick.
conversations that we're going to have here at the Milk and Global Conference, where everybody in the finance world is here, and some key policymakers
You'll
are
get to
here.
the end and then just
We're
like...
going to have a conversation next hour with Treasury Secretary Scott Bessent, who is delivering a policy speech in the next hour, and then he's going to come out and speak to us exclusively. Also, we'll talk to some of the other Trump officials. FCC Chair Brendan Carr is here, also very much in the spotlight, of course, with some of his actions. Look, it's been a very busy 100 days, I think, for both of these two gentlemen. On the policy front, for Bessent, you know, trade obviously is front and center, but I think he's really trying to bring the conversation, David, to the three-pronged strategy.
Yeah, I'll play this video and then I'll send that to them and then be like, I'm sorry, it was on me.
Tax deal, which he's very much in the throes of negotiating, has set a new sort of July 4th deadline for that to pass. And deregulation as well, which I think the administration is expecting to start to come to fruition now that the regulators are in place.
Yeah, there's so many positive things happening. It blows my mind, guys. It blows my mind. Oh, and you know what? We didn't get, let's find out what Tom Lee's doing. Tom Lee said some shit, huh? Let's look. Lots of love, Jesse. Thank you for your daily streams. Hey, you're welcome, man. Anything for you guys. All right, so we got the Bill Ackey over here talking about his shit. Did somebody say Tom Lee? Ah, there he is. Let's listen. Oh, okay.
Fundstrat Global Advisors, head of research, and a lot of, again, Tom, I don't know how you would characterize initially your take, maybe a little bit early on the stabilization, but then you really pretty much nailed it a couple of weeks ago, and that was the low. You said 5,500 near term on the S&P. We got to that easily.
Yeah, this is some of the nicest hair I've seen on Tom for a while, which is usually indication of more downside pressure.
Can you summarize what you've seen the past couple of weeks and what you think happened? I guess the peak tariff angst was hit when you said it was hit.
He's probably going to be careful with his wording.
Still, though?
Joe, I do think tariff fears can come back, but the stock market and I think the macro is in a better place today than it was on April 7th.
Yep.
One is I think that the tariff expectations, even if we don't know what they end up looking like, are really much better than what we saw on April 2nd. The second is that the markets that lead stocks, such as credit and the VIX.
All right, real quickly. The markets that lead stocks. I want to let Tom finish his thought, but I did want to speak to this because I hadn't talked about it yet. Earnings. So overall, 77% beating estimates, with the median being 6%. Only 22% missing now with a -4. So these numbers this is a pretty good earnings season. I just wanted to throw it out there.
And high yield are in a much better place. You know, high yield has recovered almost all the widening that happened since April 7th, and the VIX is uninverting the term structure, which basically means the market for volatility is calming down. And then I think when we look at 2026, I think there is stuff to have some confidence about, because the economy is holding up better at the moment, and next year we can look forward to
that was before today's read.
I think the comparisons for earnings will be much better for next year. And then, of course, if we get some tariff policies that lead to exports, we have upside to earnings growth. So all in all, I think it makes sense that the markets have recovered to this point. But, you know, the bar for recovering to all-time highs is, of course, higher. But I do think the risk-reward is actually still positive here.
Yeah, I was thinking that too. You're
CEP.
probably thankful. And
all right, I want to. Good job on the puts, man. Hey, I warned people last week. If you're still in this, you deserve the pain, because I said this thing's 5x, and with your guys' help, because you did all the work. But I said this is 5x, and it is now down almost 50% in 2 business days. So this is why you don't jump into shit, guys. This is why you don't chase garbage. And I won't say garbage, because this isn't garbage, but it is finding its natural zone of purchase. And people are down half their fucking monies, which sucks. So don't chase.
And
don't go after the next hot thing, especially when everybody's talking about it.
That we're back to where we are, but just seems like there's some backing and filling that's going to be happening.
Congrats, Jason. Good, man.
Break out to new all-time highs. Do you think with the tariff regime as it is, some of the comments made by
seeing a lot of down stuff today. Mara down 9%, CleanSpark down 8%. Wishing I would have sold some of my calls last week, but hindsight's always 20/20. And I probably could have I probably could have got to 6 figures really easy in cash last week without really ruffling too many feathers. I just hate day trading so much. It bores the shit out of me. I like swing trading better. I might play around with day trading more in the future, guys, but please don't take my actions of trading in and out of things as this is time to get all in or out of stuff. I will do it with very small percentages of my portfolio, not large ones. So just keep that in mind.
President Trump over the weekend.
Why not buy Mara? Because I have 750,000 or more. I don't even know what I'm at right now, but I have a lot in calls, so I'm good. But if you want to and you don't have any exposure, you probably should, man.
Why would, if these are temporary,
not financial advice,
why would anyone build a plan here? So that some of them might be permanent. I still think it's negotiating. I'm still not sure I take that at face value. But if it's a permanent regime of tariffs, you still think we get to new highs in 2025 or by 2026?
Yes, I think new highs are possible this year. I mean, one reason is
I think they're probable.
Have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID.
Agreed. Yep.
Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards Bitcoin term, and that's still upside from here.
Yeah, that was another one of your calls that it would catch up with gold, and it's lagged in the past. What about some of your good calls?
9 in 2. Yes, I do. If you look up TradingView under my page, and you should see at least one video running through some of the settings that I use normally. And then I have another one, Options 101. You can look that up. That's a really good one. Everybody says they love it.
Or accurate calls, Tom, have been based on.
Now, keep in mind, and I give tons of warnings in the video, options are super fucking dangerous. So you need to understand what you're doing and your risk.
Inflation. And it's a real sort of a push and pull between what we're worried about with tariffs, which would theoretically, restart inflation, even if I don't even know if it's.
Can I speed this up?
Restart's the right word.
No,
Maybe
I still
there
can't.
Is some still left in the pipeline. But oil, I just always think that the most important factor in inflation, which ripples through everything, is oil. And you look at oil, and I think that could counteract a lot of what we see, maybe even not only offset the tariff inflation,
down almost 3% today.
Be more important. So what's the Fed do?
Well, I agree with you, Joe. I mean, the two leading indicators for inflation should be, like you said, commodities, and oil is telling us inflation is weaker. And the labor market, the JOLTS data shows the job market's not that strong, so there's not really a wage pushing inflation. And I think the inflation data recently
congrats.
Shows inflation is tracking lower than expected.
Yes.
The Fed has been on hold.
That is something I got to get. We're going to let Tom finish his thought. That's the thing I almost forgot. I want to go over some stuff with ARK Invest.
And they're saying they're waiting for tariffs.
Yeah.
But what's interesting is the ECB has been cutting rates even though there's tariffs, inflation hitting Europe, or soon
so why aren't we doing it?
To hit Europe. The reason is ECB's inflation measure, the HICP, exclude shelter. If the Fed excluded shelter from its core inflation calculation, it's lower than Europe now, and yet Fed funds is over 225 basis points tighter than Europe. So I can actually sympathize with the argument the Fed should be cutting now, even if we don't know the effects of the tariffs.
Yes.
Yeah, I can too, but this makes me wonder whether, all of the
job loading
from President Trump kind of made it less likely that Powell would actually be able to cut. I don't know if that.
Should comments from President Trump make it less likely that Powell, isn't he supposed to be independent and objective? Should comments make that happen?
His intention or not, it does set him up to possibly be the fall guy if we see no inflation and we do see a growth scare.
He's the fall guy. Rightfully so.
Maybe there's I don't know when there's a method to the madness and when it's just something else, Tom.
So anyway, great job from Tom. I want to jump over to this though real quickly because I pulled it up. Where the fuck is it? I just had it. Is it over here? Is it over here? Is it over here? No, over here. Did I just bring this over? Where the fuck did I put it? 1 second. I don't know where it went, but we'll find it. I wanted to find ARK Invest. I wanted to speak to this because I think I skipped it. Right here. Okay. Oh, and I didn't even do the birth rate thing, which I got to talk about too. So Trueflation tends to lead official U.S. reports by about 3 months. Note where official data is headed next, not stopping. So this is, again, from Kathy, who we love. I love. She might be suck at some of her stock picks, but I mean, so do a lot of other people, including myself sometimes. So Trueflation CPI and US CPI. So it shows Trueflation's is down. And again, with about a 3 month lag, 3 months to 100 days, something like that. But look at where US CPI is going next, right? It's going to follow this down. So and look at how tight the correlation is. I mean, this is ridiculously good. You could see how Trueflation was right about inflation being a lot higher than the government wanted to admit during 2021 and 2022 when Biden was in power. But then also too, it's lower now, and it was lower over here, and traditional CPI metrics weren't showing that lower number, but they'll catch up to it because again, this is a decent drop lower. And also, there is just so many good things in this video. 1 second here. How
interrelated they are.
I love Kathy Wood so much. I'm going to skip a lot of what she says in here and just look at some of these charts. But right here, showing tax receipts, this is a little jumbled up because there's a lot of different metrics in purple here. But she's trying to make the argument that tax receipts will go up with lower taxation. You have less corporations trying to basically avoid taxes, not circumvent them completely because that would be illegal, but just basically finding ways and loopholes and spending a bunch of money trying to get it to where, from an accounting perspective, they can lower their tax obligation, saying that when you lower the corporate tax rate, they won't even bother. They'll just fucking pay it. And that the growth that goes along with that will actually end up increasing tax receipts. So that's one chart that she was showing, which I thought was a really good one. And then over here, we have the Fed funds rate. So we got the rolling 16-month average and then the federal funds target. And what she's saying here is that we're right now, the Fed's incredibly tight, tighter than they should be. The Fed's up here in purple. We're down here in green. It's stupid. We need to lower rates. Velocity of money. She's saying she actually expects velocity to roll over. This is bad because velocity of money rolling over means that the economy will slow down even more. And this is kind of the global, let me just double check. Chart, macro, informational purposes only. It doesn't say global, but I do believe it's the global velocity of M2 money supply. And so global or not, we're seeing a rollover in money velocity where even with money printing, we're not seeing it put to work. I think we're going to see a lot more of that in the future, but we're going to have this hiccup where we're rolling over more, which is going to pull down. It's going to pull down economies around the world and slow them even more. Bill Ackman just said the next step on tariffs should be a 180-day pause. Yeah, he's all about that, isn't he? He got his 90-day, though. And we probably will see something like that. Probably not for China, but for other countries, if we haven't gotten things resolved with them, we'll totally do that. Maybe not all of them. If they're helping China circumvent our tariffs, maybe we don't help them. Trump tweeted his crypto card. He's got a crypto card. Existing home sales. Again, she talks about in here how home sales have been in the gutter for fucking ever, and how, if anything, we're going to see these ticking up in the future. I think all that's true. She talks about U.S. auto sales and how they're up, but we're seeing auto delinquencies look really bad. I'll talk about that in another slide. ISM manufacturing is trending up, but again, it's been a dumpster fire too, longer than after the dot-com bubble. Much, if you look at overall time that we've set under in contraction territory, it's probably becoming more equivalent to what happened in 2008 great financial crisis. So very bad. Capital good new orders and non-defense aircraft and parts, just showing that these have been really, really low. Expecting those to pick up in the future. Trump gala dinner, nice. NFIB, Small Business Optimism Index, dropping. She thinks this is going to drop even lower because of what's going on with tariffs and just negative talk. I agree with that. Let's go over here. She's got the U.S. consumer sentiment by household income terciles, basically indicating that sentiment is very, very poor. It's been very, very poor for a while. Hasn't really gotten much better than 2022. It started to go up, but then it rolled over again at the end of the year into now. And it started to roll down in the middle of 2024. So again, not looking good there. Lower incomes, especially. University of Michigan survey of consumers, expected change in business conditions in a year, worse. Off the fucking charts pessimism. Again, all these indicators showing the worst of the worst. The yield curve inversion showing that it uninverted. She had some interesting comments in regard to that. I might butcher them, so I don't know. I might actually play that part out to hear her comments on this one. I'm going to do that. We're going to listen. There's really good stuff in here. I don't want you guys to miss it. It's really, really good. So let's listen.
And of course, that's related to what they think businesses are going to do. Here is the yield curve. Now,
you should not miss these posts when she does these. You should not miss them. I'm just telling you.
Letter, we illustrate, or we describe, this chart illustrates how typically a harbinger of a recession is an inverted yield curve. You can see
we know that, right? The inverted yield curve being a harbinger of a recession. Let's keep going.
Shaded areas are recessions. And before each shaded area, the yield curve has turned negative every time. It even did in 2019 before COVID.
Yeah, so she's right. Before COVID occurred, we went negative over here and had a very temporary recession, and then it fixed itself. Then in 2022, she's arguing that we're in a rolling recession and that we've basically been in a recession the whole time, and that through money printing and everything else, it didn't work out great. It actually caused other problems that kept us uninverted, but that we've been pushing our way along, but we've been in a rolling recession the entire time. And if you look over here in 2008, guys, you'll see we uninverted over here in about, we were inverted in about 2007, and then we went back up. And then again, the dot-com bubble, we were inverted. Actually, the inversion and the dot-com bubble were pretty much at the same time, and then markets came back around. By the time we uninverted, market was in a technical recession, but stocks were already starting to get better. But let's listen to what the rest of what she has to say. So there's good points, and I'm probably forgetting them.
But it did so just for a month or two. But look, it has been very negative for a long period of time. Now it's moving positive. Every time it has moved positive, it is in a recession. And that's why I think we'll hear a lot more people talking about recession, economists, strategists, talking about recession and thinking about how long the average recession lasts. Whereas you're going to hear us continue to say, we've been in a rolling recession, and this is probably the end of it, with high-end consumer coming down and government in recession for the first time. We also believe that
So again, she's telling you that we're coming out of the recession right now, not that we're going into it.
yield curve will continue to create surprises going forward. We have been struck over the years since 08-09 that this has been a downtrend in the yield curve. Normally, massive fiscal and monetary stimulus would have gotten that 21 yield curve back up into the 200 to 300 basis point range. Instead, it stopped at 150 basis points. And we wonder if we'll even make it there this time, because we think there is a deflationary undercurrent that the yield curve is beginning to pick up on. And it's being caused by what we believe is the convergence among all of the technologies that are evolving.
I think it's that. I think we've got the technological convergence that's creating deflationary aspects that are going to be ever increasing. That's 100% true. I agree with all that. Again, cryptocurrency, with cryptocurrency and Bitcoin, you're going to be able to lower, you're going to be able to basically, I don't know if it's $1 trillion a year or what the math is, but there's a bunch of money that's spent on remittance that doesn't need to be spent, that can be done for a fraction of the cost. So you're going to see that doing better too. Then I think you have China deflating massive amounts and causing a lot of change there too.
Evolving today and have entered prime time. You can see how many of these technologies are evolving, how interrelated they are, how central AI is. And you can also see something interesting here. Trueflation CPI versus the
we already looked at that one.
US CPI.
Let me see here. There's another talking point. I'm just trying to find it. Give me 1 second. It might be over here.
We also explain in the
Oh, this is interesting. Yeah, this is a good one.
letter that our kind of strategy, any innovation-based strategy not wedded to the broad-based benchmarks, has had a very difficult time facing three major headwinds during the last 4 years. One was interest rates. We think they're coming down. The second was the concentration in the market.
Why is Tesla dumping? Everything is dumping. It's probably because we've got higher prices paid and the ISM was better than expected. Better than expected makes it look like the Fed isn't going to cut anytime soon. So people are probably worried about the Fed cutting in June. And so the whole market is dumping. And it's not just Tesla. People get too focused on their own stocks. Apple is down. Nvidia is down. Tesla's down. Amazon's down. The entirety of the Mag 7 energy stocks are underperforming. Berkshire Hathaway is down almost 6% today. So there's a lot of stuff dropping. I wouldn't focus just on Tesla.
market towards, very few names.
Bitcoin and Bitcoin related investments getting smoked today.
And those tended to be very cash rich, larger cap names. We think we're at the end of that headwind as well. And we'll see as this correction in the market turns.
So she's talking about how we don't have the headwinds of like the higher rates. We're going to have lower rates coming up. And then at the same time, we had this issue where the market cap of the largest stock relative to the 75th percentile. So again, like the really big caps have been outperforming for a while and doing it in a huge way. She thinks that that's getting ready to come to an end. You can see where that came to an end in 1932 after the Great Depression kind of found its depths, and then other stocks started to outperform. You can see that happening in the 70s too, where there was high amounts of concentration. The 2000s, 1964, 2008, 2009, where there was high concentration. And she thinks we've reached the peak, which is similar over here to 1932, where we're going to see that high concentration stuff start to dwindle away, and you're going to see smaller companies become more investable. Breaking: India offers 0 tariffs on auto parts, steel from U.S. Cool.
Turns into a recovery. We'll see if this is what continues to happen. It started to after the election. The tariff turmoil caused a bit of an upset. But I think coming out of this, especially if we're right, that inflation's coming down, the economy is going to recover nicely, productivity.
So now we've got Mexico, good communication with Trump. We've reached deals. So now you've got positive stuff for tariff coming from India, and then positive also happening with Mexico. So that should be interesting. But again, this thesis that we'll see, remember how last year Tom Lee was talking about small caps outperforming, and we never really saw it. I thought the same thing. She thought the same thing. But because we were at record levels of the top largest companies just performing really, really well. So when you become more risk on and you don't have that concentration in the largest caps, people start to divest from those and they start to jump into some of these others and start to spread some of the wealth. And that's what she sees coming.
Leading the charge thanks to these technologies. We think this headwind will dissipate as well, and that the bull market will broaden out. I would describe the bull market through 23-24 as I know anyone wedded to the benchmarks won't agree with this, but as an unhealthy bull market. It was not broad. In fact, it has never been less broad. It was worse than the
She's 100% right.
depression level concentration.
Yeah,
as
look at
measured, by this Goldman Sachs study. And now we think it's going to broaden out into a healthy bull market, as it did from 32 to 36, 39, into the 40s, the late 60s. The exceptions were 73 and 2000. They ended up in a bear market. But even 09, which I remember very well.
Yeah, okay. I keep forgetting the gray is a bear market.
The market recovered, and the recovery.
But again, the valuations in the dot-com bubble were just like fucking ridiculous. But again, it's more like GFC. It's more like the pandemic. And I agree with that.
It was very broad. So, and then the last chart in the letter, we have more charts here and we'll go quickly through them. But the last chart in the letter talks about the third headwind. So the first was interest rates. That's gone. The second was concentration in the market, fear causing a shift towards very few stocks, cash rich, large cap. And we think that's dissipating. And then the third is certainly the valuation headwind. And you can see innovation-based strategies are at near record low valuations. When I say record low, this is the history.
And so innovation-based strategies, guys, think of like ARC Genomics, think about the whole technical sector, whether it's in ARC stuff or not. I mean, again, not all their picks are the greatest, but the valuations are through the floor on innovation and tech. And she's saying that you could see where they were high after the pandemic. Everybody valued them really, really high, right? A huge percent premium. She's thinking that we're going to come out from being 13.3%, like way under what it should be, to maybe developing a premium again, which would be awesome for ARC Genomics.
History this is the history of ARC's life, but innovation-based strategies broadly are selling at a very low premium to the S&P 500 as measured by enterprise value to adjusted EBITDA. We worked with S&P 500 to adjust for stock-based compensation and R&D, both the S&P and the various innovation strategies. And you can see very, very modest valuation premium. The average over the life, or at least ARC's life, on this metric is roughly 90%, I think. Taking out COVID, the COVID distortion, it's 75%. So innovation, we would say, is on sale. So let's finish.
Which again just means like things like ARC Genomics might end up going doubling, tripling, and I can make shit tons of money. I've got calls I think that go all the way out to December of 2026 on those. No, I'm sorry, June of 2026. So very interesting.
Up these charts quickly here. This is from...
And I'll summarize this one. So disruptive innovation could grow to dominate markets. So she's talking about disruptive innovation. If you look over here, she's showing non-disruptive is in gray, and it makes up the vast majority of the market right now. The Mag 6 makes up this light, like teal color. And then in purple, it's other disruptive innovation. So what she's saying is the Magnificent 6 will grow a lot. And then also we'll see, and I don't remember if she takes Apple or what she takes out of there, but and then the 50% CAGR here, or maybe she includes that in Tesla. That's probably where Tesla is. So she's doing the Magnificent 6 up here, putting Tesla separate. But she's saying that that's going to grow a lot by 2030. It's going to become a huge portion of the pie, dwarfing non-disruptive. And then again, Mag 6 will benefit as well because they're cash cows and they got a lot of money.
Big ideas, 2025. And here are...
Let's see what else we got here. U.S. 10-year.
Out of that bull market. In the
I'm going to keep going past here. What else we got?
Inflationary world. And we're just not, as measured by commodity price.
Yeah, so she's saying commodity prices aren't going up a lot. And they're going to continue to show this downward trend. Metals and gold ratio versus U.S. Treasury yield. The 10-year Treasury yield is going up. The metals and gold are going down. Let's see here. S&P price to gold ratio. So again, showing though, I think what she's showing here is the S&P price has been doing better and beating gold on average. And again, it's had its moment where it kind of got kicked in the nuts recently here, where it's dropped a little bit, but that's not going to last forever. S&P price to WTI crude. So again, S&P is kicking oil's ass. We already looked at that one. Bar cap U.S. corporate high yield versus the 10-year spread, showing that this is dropping back down. Let's listen to what she has to say about it.
During recessions, it does spike. Tends to go up before recessions.
Bitcoin is my hedge play. If the world blows up, Bitcoin's going to go through the roof. It's going to go through the roof because there's going to be massive amounts of money printing to try and make up for it. So even though Bitcoin is today, gold is up 2.24% and Bitcoin is in the red, and it has been in the red from the close of this last week. And it can get hit over short periods of time. Bitcoin is my hedge.
And then spikes during a recession. So we'll keep an eye on this one to see if this rolling recession turns into a rolling recovery and prevents a big spike. And then finally, always like to talk about Bitcoin to gold. And
yeah, look at this. This is perfect too, guys. The line that was drawn over here showed how Bitcoin perfectly hit support for the gold ratio. If you drew the line across, I think I got that chart somewhere. And then it bounced perfectly right at that. I'll see if I can find the chart.
Going parabolic did take this ratio down, but you'll notice that it did not break the uptrend that is in place and that we think will remain in place. Bitcoin did act more as a risk-off asset. A risk-on asset in the market's recent correction. It behaved like the NASDAQ, unlike gold. But we believe that it was just correcting to this trend line because the Bitcoin price went up so much more than the gold price last year. So we think that this trend line will continue to move up if we're right, that we're moving back into a risk on environment.
Depends on how you draw it.
The gold, why did gold act as risk off, but Bitcoin not do so? I just described one reason. Bitcoin was way ahead of the gold price, so that is one reason. But I think the other reason is we weren't in a financial collapse.
There we go. That's better.
Like 08, 09, and the banking system was or the counterparty risk in the banking system was not called into question. So we think the flight to safety into gold was more of a, hey, let's readjust and get this back into some kind of trend line. So with that, I hope I've conveyed we're really excited about
I'll let her close her thoughts, I suppose.
Narrowness of the market and valuation. And we think that we're being set up here for some important surprises to the upside, as many strategists and economists worry that we're heading into a recession. We'll be talking more and more about the productivity-driven recovery that will spell the end of the rolling recession. So
I agree. I 100% agree. Anyway, I wanted to show you guys that. I thought it would be important for you to see it. I think that's probably where I'm going to stop today. Guys. So thank you very much for being here. Bitcoin's still holding on strong. Kathy Woods thinks that we're coming out of a rolling recovery. Tom Lee thinks that we've already seen the bottom. It sounds like we're going to get some deals coming with Mexico and India fairly quickly. We're seeing better services data than we expected. If that's the reason to be bearish today, you do you. I am not bearish right now. I'm actually really excited. So love you guys. Take it easy. Have a good day. And we will talk again tomorrow. Okay. But otherwise, peace out. And I will see you.